Everybody can see my screen, yeah?
Yes, sir.
Sweet.
Yes, sir.
Excellent. Everybody doing good tonight?
Yeah, we are.
Excellent. Glad
It's been great.
Glad to hear that. Real quick, this is your first time to see this, either live session or just in general, first time to see, throw a 111 in the chat box. All right, cool. If everyone could have your mics on mute. It is an interactive session, so you can speak. So maybe Alexander, maybe your phone's on right now or something. So yeah, just if you wouldn't mind, keep your microphone on mute until you're ready to speak. If you're ready to speak at any time, please. As some of y'all know, I miss stuff in the chat box pretty easily, so just speak up anytime. It's an interactive session. I want y'all to ask questions. I want y'all to answer questions because everyone's probably thinking the same stuff you're thinking. So yeah, there's that. Go ahead and get started here. We are learning a style of trading called meat and potatoes. Meat and potatoes, that's all you need to eat. You learn this, you can eat for the rest of your life. There's advanced stuff. We'll probably touch on some of that tonight just because we have mostly repeat students. Actually, real quick, either type in the chat or hit on the microphone. Does anybody have any questions just so I can address?
I have a question.
Okay.
If I'm going through step 1, 2, and then the fourth step doesn't work, should I just look up another trade?
Yes.
But
For right now, for the meat and potatoes portion of it, yes, if anything, step 1 through 6 doesn't meet the rules, then you skip it and you go to the next. Just go to the next track.
So just forget about it, basically.
Yeah, basically forget about it for now. Once we touch on the advanced stuff, then you get to go to a different set of rules, but it's for a different style of trading.
Okay,
So
perfect.
for right now, yeah, we're locking that in. Anybody else have any questions or anything you want me to address specifically in this session? No? Cool. All right, then we'll just kind of go with the flow. I know I give y'all different versions each time. This version here, go ahead and screenshot this. I will get, there's something wrong with it, isn't saving correctly, but this is the most updated. It's very different than all the other versions that I've put out so far. I'm just trying to make the most sense for everybody. Go ahead and screenshot this, take a picture of this. What's that? So everyone take a picture of this real quick because we're going to go back to it as we're moving forward, and then we will get started. We'll leave that on for like another 5 seconds or so. Like I said, screenshot, take a picture of your phone, do what you need to do. And there we go. So let's go to the charts.
Michael, someone in the chat box. Hello, I am new here. Don't mean to pull you back, but can I easily catch up?
Yes, cool. Who was that said that? Just so I know who was the new person.
It just says HP system. So they
HP systems is new. Okay, cool. Hey, Brian, maybe it looks like you're not muted.
Hey, Jay, did you do what? Edwin, can you help to mute the people that just got on?
Yeah, let me see here. I know there's a way to mute everybody. I'm still learning how to use this.
You know where the participants are? Well, I think everyone's muted. If you click the participants, you can click on the mic next to it and it'll say mute.
Okay, let's see, participant. Okay, I'm gonna mute all. Feel free to unmute yourself, but yeah, I'm gonna go ahead and mute all. Thank you very much, Lauren. Okay. So yeah, let's go ahead and get started then. Okay, so meat and potatoes. This is a style of trading. It's very based upon colors. So for my new people here, we're gonna go ahead and go through this a couple times, and then for my return students, we're gonna spend a lot of time on the right side and actually showing what trades look like once we're following these rules and looking for good trades. So in reference to this style of trading, we have on this sheet that I had everybody take a picture of, we have the left side and the right side. If anybody's missing it right now, please speak up so we make sure that we get you. If you're new, okay, cool, just reading that chat. I actually saw a chat for once. So, yes, so in reference to this trading style, we're always using the colors of candles on the left side of this sheet. We have the right side and the left side of this sheet. The left side is strictly for identifying what the trend is. Across any time frame, doesn't matter what the time frame is, we follow these steps, these rules 1 all the way through 6. Everything needs to follow the rules in order for us to go to the right side where we're going to go ahead and select a zone. So all left side is doing is just figuring out what the trend is. Okay. So again, step one on this is, first off too, also trend. You see at the top of the sheet says ignore wicks. This is all going to be all about bodies of candles on the left side of this sheet. So for step one, we're going to identify what we call the action candle. That is going to be the first color of candle that we see. See here how we have this green candle, one green candle. That is going to be the action candle. We're going to ignore that. We then go to step two. We identify what our anchor candle is. And really, it's not just also too, anytime there are sequential or candles next to each other without a break in color, like this right here, 1, 2, 3 red candles, that counts as one candle. To the left of that, we have 1, 2, 3 green candles. That counts as one candle. One red candle, one green candle, one red, one green, one red. You get the point. So if there's no break in color, you always count it as one candle. Why? Because these candles represent a time period. Like right now we're on a 4-hour chart. So just when this 4 hours ended, the next 4 hours started, the next 4 hours started. So that's actually this one solid down move. If we go to, so that's 4 hours. To show it better on a daily real quick. It's not gonna be exact, actually. Just real quick, just to show. Okay, see here how we have all these red candles. We're on an hour chart right now, right? 1 hour, 1, 2, 3, 4, 5, 6, 7, 7-hour candles. See how I go to a 4-hour? It changes to these red candles, right? It's just changing the time period. That's why it's just a break in price, just because the next time period started. That's why we count that as one candle. So moving forward, step one of this is identify our action candle. What is our action candle? Green, right? That's the first color we see, green. What do? We ignore it. So we go to step two. What is our anchor candle? The color to the left. We have 1, 2, 3 red candles. We're going to go ahead and mark the high. Let's change that. We're going to mark the high and the low of that candle. We're going to mark the high and the low of our anchor, right? Top of the red, bottom of the red. Okay. We then go to step three. We have to ask ourselves, is the anchor, that's step two, that's called the anchor, is our anchor engulfed? We look to the color to the left, and that's green, right? We have 1, 2, 3 candles. We ask ourselves, are these 3 green candles bigger than our 3 red anchor? Answer to that question is no. Okay, so it's not sideways. It's not engulfed. We get to go to step 4. We have to ask ourselves, who is in control? We take the high side of our anchor and we go across till we hit a wall. What a wall means is when you hit a body of a candle. We take the low side, we go across till we hit a wall. See how we hit this green candle here? We then look down we hit a green wall, a green body. We look down to see where it goes from red to green. We call that color change. Where's the color change? That's the wrong shape. Color change is right here. Go ahead and mark that, right? So you see on your sheet there, the new one that I gave out, high, low, who's in control? Who hit the wall first with the color change? Most recently in time. The answer to that question is the low side, the buyers. Why? Because most recently in time, on the high side, it's all the way across, we can't even see. On the low side, boom, we hit a wall here, we go down, look for a color change. Because we hit a green wall, we look for where it goes from red to green. Circle that, that's where that hit the high area, hit the low side first. Okay, so you see on that sheet, if it hit the low side first, we then have an uptrend. Okay, cool, uptrend. We then get to go to step 4. See how that we have this green candle now? Why? Because a 4-hour period just ended and a new 4-hour period just started. We're going to pretend that that's not there right now because that changes the picture. Step 5, setup. We have setup. What color is your action? You have to go back to the step 1, the action candle, and the one that we ignored, and ask yourself, oh wait, did I say that right? No, it was green. My apologies. That is green. That was already there, but I just kind of confused myself real quick. Anyways, step 5, setup. What is the color of our action candle? For an uptrend, we need it to be what color? Red, right? What color is it? Green, okay? We call that sideways. We skip it and move on. For those of you who've seen this before, and as you see this more and more, again, it's sideways because it's not giving us the color we need for the action, but who's in control though? Step 4. The lows are in control, right? So it's sideways, but the bias on it still is up, right? Alrighty, so we skip that. We go to the next chart. Get these boxes out of here so you don't get confused. Okay, one of my new people want to try the next one? You want me to go through one more? If anybody to try that's new, speak up. If not, I'm gonna walk through it again. All right, I'm gonna go ahead and walk through it. Okay, step one, identify our action color. What is that? Red. Actually, hang on, I'm gonna check the chat. I see. I'm trying to pay more attention to this now. Let's see here. What do y'all gotta say? Jummy is my name. Must the time frame be the same as yours, or does it work with lesser time frame? Like in what we're doing right now with the trend? Okay, someone answered that. Works on any time frame. Yeah. On any it doesn't matter what time frame you're on. You do these rules on any time frame. It works the same on any time frame. If you want to figure out what the trend is on a daily chart, you go to a daily chart. If you want to figure out what the trend is on a 4-hour chart, you go to the 4-hour chart. So yeah. So okay, step one, action. We have what? 1, 2, 3, 4, 5, 6 red action candles. Yeah. We ignore those. We go to the color to the left. That's green, right? 1, 2, 3, green. We mark the high of our, and that's the anchor. We mark the high of our anchor and then the low of our anchor. It's already marked. We then go to the color to the left, and that's red again, right? Is our red color to the left bigger than our green anchor? No, it's not. So it's not engulfed. Is it engulfing it? Is it bigger than that? No. Okay, cool. So we then get to go to step 4. Who's in control? We take the high side, we go across till we hit a wall or a body that's way back here, we can't see it. We take the low side, we go across till we hit a wall, boom, happens right here, right? We go down till we get the color change. It's already marked because this is an example we used on our last session, or from a session way before. Those of you who have seen this before, I just want to show how cool this is. This blue line, because I just saw it because I was here before, this blue line was representing an anchor break. Those of you who've seen anchor breaks before, when I've gone over that, that line represents an anchor break that was going to the upside. So just a market order on that anchor break, that's 308 pips. Do you see how once we got a close above here, if you took a market order on that for breaking this anchor, price never came back to it again. So that would have been a perfect example of a really, what's that? It's a 24 pip risk if you did a market order and had your stop down below where you should have had it for, you know, basically 300 pips. Not bad. That's why this style is really cool. But again, back to this. I just wanted to point that out for those of you who've seen this before. So step 1, action, right? Red, we ignore. Step 2, anchor, high, low of our anchor, the green candle. Step 3, is it engulfed or sideways? Color to the left, 2 red, right? Is it 2 red engulfing or bigger than our green? No, it's not. We then go back to our anchor, go across to, we're on step 4 now, go across till we hit a wall or body of a candle, same thing, didn't happen. Over here, we go till we hit a wall, we hit a green wall right here, we go down till there's color change, goes from red to green, right? We mark that, cool. Okay, now what one of these happened more recently in time? The low side, right? Because we can't even see on the high side. So it had the low side first, so if it hit the low side first, we call that an uptrend. Why? Because the buyers are in control. They hit the low side first. It's an uptrend. The buyers are in control, moving price up. Step 5, do we have a setup though? What color do we need our action candle to be? If the lows are in control, the buyers are in control. Step 5, your sheet says uptrend with what? Red action candle. What do we have? Red action candle. So we are good. We are uptrend with a setup. We then get to go to step 6. Is there a level break? Is it breaking the anchor? So is our action breaking our anchor? Is it closed down below our anchor, trading below our anchor? No. If it's trading below, it's okay. If there's a close below, that would be breaking the anchor. But in this instance, no, it is not breaking the low of our anchor. So we're good. As of this point, we are uptrend with the setup. We then actually get to go over to the right side of the charts. So unless anybody has an immediate question, we'll go ahead and go over the right side. Anybody have an immediate question?
Can you go over what the step 6 real quick, like what you mean by breaking the anchor?
Yep, absolutely. Okay, so try to look for a quick example of that. Okay, it's not a good example. I'll look on another chart too, but I'll just explain it to you on this right here. Oh, actually, no, what am I talking about? This right here. Okay, you see when start new steps, right? This is the new one, right? Let's say this is real time. That's our action, right?
Yeah.
These three green would be our anchor. Go ahead and mark that. Get this line out of the way for right now. Okay, so that's our anchor, right? That's our action. We're ignoring anchor, high side, or not engulfed, high side, low side, hit a wall, color change down here, right? Okay, cool. We got the color change. Step 5, do we have a setup? If we have an uptrend, what do we need our action to be? Red, right? Red, cool. Step 6, is there an anchor break? This is our anchor here, right? You see how this red closed below our anchor?
Mm-hmm.
That's called an anchor break. We got a candle. This one right here, this first candle right here, this one's actually okay. Why? Because the wick traded down below here, but it didn't close. If it doesn't close below here, it didn't technically, it's violated it, but it hasn't actually broken it. It's traded above or below wherever your anchor is, but until you actually get that close, that's a confirmation of, hey, I don't care about this anchor. Boom, I did violate it. It's done. I might be going the other way. So whenever you have a wick down below, you want to be cautious. Be more cautious. Like, okay, hey, price has traded below here, because pretty much your anchor, what your anchor is your playing field going along with trend to be looking for a setup on a smaller time frame once you've identified up with the setup, down with the setup, following all the rules. So if you want to look for a zone inside of here to keep taking it up. But if you see that price is trading down below the anchor, again, without a close, you're okay, but that's giving you an indication of, hey, you know what? This might be starting a trend reversal. It might eventually break this and close below. So you want to be cautious. You have less of a possibility of winning. You have more of a possibility of this trade not working out. We want to take the highest possibility stuff.
Okay.
So what's that?
I said, okay, cool. I got it.
Cool. So there's that. We got then the close below here. And then see below here, but really it's just grabbing this section here and it continued to move up. But yeah, just being aware of that.
On steps 1 through 6, you always do on the daily?
No, that's just, I always have 4 charts up. If I'm looking for more of a long-term trade, like traditionally, like at nighttime, like before I go to bed every night, I scan all these. I try to find up with the setup or down with the setup on the daily, and then I'll go down to a smaller time frame, either a 4-hour or a 60-minute, to look for a zone that hopefully will trigger during the London session. But regardless, I've kind of talked about it before a little bit, multiples of 6, whatever time frame, doesn't matter what time frame, whatever time frame you're using to identify your trend, that's just to identify your trend. You then go to like a multiple of 6 is a good place to start breaking it down, doing the right side rules, looking for an area to identify a zone within that daily anchor. So if we were doing this on the daily, we would start with the 240 to start looking for a zone. If we were on the 60, we'd go down to a 10-minute. If we were on the 30, identifying trend, we go down to a 5-minute chart to look for a zone, multiples of 6. And then you can break it down further and further from there. But yeah, simply put, to answer the question, yeah, it's any time frame. Whatever time frame you're using doesn't matter. It's the same across the board.
Okay, cool. Thank you.
Yep. So anybody else have a question before we go over the right side real quick? Nope. Okay, cool. So again here, I'll just recap this one more time. I know there's new people in here. We have, and then we'll go to the right. We have step 1, action, red, we ignore. Step 2, green anchor, mark the high, mark the low. Step 3, is it sideways or engulfed? No. The red to the left is not bigger or engulfing. Step 4, go across till we hit a wall. It doesn't happen on the high side. Go across till we hit a wall. Hits right here. Go down. Get the color change. Okay. So what one's in control? The lows are in control. Why? Because what one happened more recently in time? When did we hit a wall more recently in time? It was here on the low side. If the lows are in control, we call that an uptrend. We go to step 5. Do we have a setup? In order to have a setup for an uptrend, we need to have what color action? Our action is red. We have red. We need red. We got that. Okay, cool. Step 6. Do we have an anchor break? Is our red action breaking the low of our anchor? No, it's not. Boom, good to go. So we are uptrend with the setup. So we're on the daily identifying trend, uptrend with the setup. Now we would go down to start at the 4-hour to start looking for a zone. First thing I see right here, first thing we see right here is this area right here, right? It's at the low of our anchor, but okay. And this will make sense as we move forward, but I'm on the 240 right now. I know that this pattern right here with these wicks like this, I have a wick alongside a wall with this other one. We like the even wick on wick overlap. That's where the wicks are even on either side, but it's still going to, this is the first thing that I'm seeing on the 4 hour. So that's my starting point. Just immediately coming from a daily uptrend with the setup, going down to the 4 hour. The first thing I see as I've trained, you know, as you get your eyes trained to do this, is this area right here. Let's go ahead and take a look on the 60 minute though, because this is where it'll make a lot of sense more so. Okay, so on the sheet, you will see now when we're on the right side, this is where we identify our zone. We're going to respect wicks. We're going to pay attention to wicks. Wicks are very important. Wicks, you know, these little things right here. So first thing we're looking for in a pattern is a strong move in and a strong move out. The move out is more important than the move in. But right here, we see this. We see these. This isn't the strongest move in, but you have these green candles. They're not boring candles. They're not exactly super exciting, but it's a strongish. I call that a strongish move in, right? But see how this candle leaving here? That's a pretty powerful candle here, right? It opened right here, traded down a little bit, shot way up, came down just a touch, closed, and then the next one continued. And you see you have a follow right. I always love when I see a second candle right behind it that's pretty much equally as strong. So this is a strongish move in and a strong move out, right? What else do you need? Boring candles. What are boring candles? Boring candles are where these candles that were not a whole lot has happened. There's the open and the close are pretty close to each other. So wherever it opened, it closed to a very similar place, meaning there's always a fight happening. The buyers and sellers, someone's trying to take it up, someone's trying to take it down. There's a fight happening. When price closes very close to where it opened, that's a boring candle. Because why? Because nobody actually took control. They're still figuring it out. Price is still moving up and down. No one has solidified who's in control. Okay, so here we have boring candles, right? There's big wicks on either side. That's a little more body than I'd like to see, but that's a boring candle. That's a boring candle. That's a boringish candle. All these in here count as a boring candle. Actually, you know what? Let's do this right here. I'll go down to a 30-minute real quick. It's all about fine-tuning stuff, right? Yeah, this would be a perfect example. So this is all the same area here, right? You see here how price closed, and then we have this big, more exciting green candle, right? Strong move in, and then a very big, strong move out, right? So that's our move in and move out, strong move in, strong move out. Then we're looking for our boring candle. You see this candle? This wick is tiny. I mean, this body is tiny. It literally opened basically right where it closed. It traded up and down. We're looking for that fight going on because we want that fight to happen because we want there to be a battle right there because that's an area of interest, and then we want somebody to win. That's what our move out is. Someone took control and moved in. We had a fight. It was boring. They're trying to figure it out, and then eventually boom, price took off, right? Okay, cool. Strong move in, strong move out, boring candle. And then we have to ask ourselves, is it fresh, right? What does that mean? Since this had happened, had price come back into it? Since this move happened and price took off out of here, has price ever come back into it? No, it hasn't, right? Okay, so that means it's fresh. If price came in and touched here and maybe not cleared the whole box, but kind of moved up, that wouldn't be fresh. Doesn't mean it's still not good because there's still a portion of this box that's good, but it's not fresh at that point. So this is fresh because price hasn't been back into it. We then have to ask ourselves, is it authentic though? What does that mean? If there is a rally, a base in a rally, if price rallies, it bases out and rallies out, that's always going to be considered authentic. Why? Because price was up before this had happened. Before this pattern right here had happened, price was up here, right? When price was up here, there were sellers that were left up in here. And then if we look further left, there's still, because this stuff is all fresh up here. Price hadn't been through it, right? There's sellers up here. Once a rally base fight happens and rally, this candle goes and shoots through this and closes above. This candle can't close up above here if there's still sellers sitting here. It'll keep doing this number here until the sellers are exhausted and price goes up and closes, or the buyers are exhausted and price goes down and closes, right? So if there's a rally base and a rally, we don't even have to check. We know automatically because price can't close above here if there's still sellers sitting right here, right? So rally-based rallies are always authentic. You see here, this pattern here, if we just were paying attention to this lower portion here, this is a drop, a base, and a rally, right? That we have to check to see if it's authentic. So what do we do when we have that pattern to check if it's authentic? On the sheet, you see how it says look right. Oh yeah, so on freshness, you had that area because you have where price was, you look to the right, has price returned. On the authentic side, if it is a drop base rally, or in the instance of a sell, a rally base drop, that's when you would check rally base drop or a drop base rally. So we have a drop base rally here, right? So we take the bottom, or we take our drop base rally, that pattern, we look to the left till we hit a wall. We have to make sure that we're hitting a wall. We hit a wall here, that's rallying up. So if we hit a wall here again, because before this had happened, there were sellers sitting here on this left side, right? Price was moving down. It hadn't been back up to it. There's still willing sellers in here because that's what happens when price moves down. When it retraces, they want to try to take it down. That's what this fight is. Candles are going up and down. But eventually the buyers exhausted the sellers and price moved up. So when there is a wall, when we hit a wall here, especially rally-based rally with a wall, we know that it's authentic because in order for there to be a wall there, it had to chew through whatever sellers were still sitting here. So you only need to check that on the drop base rally side or the rally base drop side, okay? So this instant on this trade, we have, let me get rid of this box because we're not looking at that area. We have strong move in, strong move out, boring candle. It's fresh because price hadn't been back into it. It's authentic because it's a rally-based rally, right? The other thing that we're looking for is something called white space. What is white space? White space is an odd count of wicks next to a wall. Make this bigger. Okay. So you see here how we have these two wicks, right? This red wick and this green wick. We have to break this down to determine what still has fresh, authentic orders in it and what has been cleared out, right? So we have this first section of wick here, right, where the red and the green are matching and they're even. We call that a 2 count or cleared out. When this had happened in real time, this candle closed, right? It opened, it probably went up, traded all the way down. Sellers were trying to take it down, but the buyers took over and beat out the sellers and brought price back up, giving it to close here. So when there's one wick alongside a wall, an odd count, 1 wick, 3 wicks, 5 wicks, 7 wicks, 9 wicks, 11 wicks, whatever, it always counts as established because whatever way it's moving, they tried, in this instance, the sellers tried to bring it down. They couldn't do it. Price came back up and closed up here, right? That left us a clue. If there was a fight, sellers bringing it down, they weren't able to get a body to close. That's why we have a wick, because they closed up where it opened. The buyers took back over and sent the candle back up, right? So that means it's established. There's still buy orders sitting there, right? Price closes here, opens here. See how this wick came down? It didn't get all the way to the bottom. Why? Because there was established buy orders. When there was 1 wick sitting here, there was established buy orders still sitting here. The sellers tried to chew through them. They tried to beat them. They couldn't. They got to this point here. The sellers were exhausted. There were more buyers than sellers. The buyers took over and shot that candle explosively out of there. I mean, you see how explosive that move is. Okay, so the first section of this, when we come back to look at it for, is this a good zone? We have the first portion here, 1 count established. When we have a 2 count, a 4, if there's 4 wicks or 6 wicks or 8 wicks, if it's an even count, it's cleared out. That means price was established when it was 1 or an odd count. When there's an even count, it's cleared out. We count that as cleared out. There's no more buyers sitting here or sellers if it was up above. But we still have, okay, so that was this section. We didn't have down below where we have, again, a single wick alongside a wall, right? That is established. Because when price was here, it closed here, it came down, buyers took back over and sent it up, and then they came trying to retest it, couldn't get all the way through, and price came up. Okay, well, there's still people with buy orders sitting in this area. So that's why it's established. There's a one count. We know that this gives us, again, this gives us the clue, just when we look at the chart saying, hey, this fight happened, the buyers took over, sent it out. Okay, so there's still willing buyers sitting here, one count. Up above, two count, established, cleared out, right? I know this might sound weird just for y'all that haven't seen this before, but I promise the more and more we do this, it's going to make a lot of sense. Let's go back to how this chart actually looks. So here again, strong move in, strong move out, boring candle, right? Fresh, because price hasn't been back into it. Authentic, because it's a rally-based rally, right? With white space, we have white space here. A lot of times you want to ask yourselves, you know, how much white space is there and how much is cleared out. So let's see here on this instance, we have basically 2.3 pips of white space, and then we have 2.1 of what would be cleared out, right? You always want to have your white space be more than, you want it to be more of a percentage of that pattern, of that box, of that zone. You want to have more white space than cleared out. You want to have more established buy orders sitting there than cleared out. But if you look at your sheet, there's also, you see where it says exception on the far right. There's an exception to that rule only when you see this pattern right here. You see how on your sheet, how those two wicks, they're not matching. They're close, but one's bigger than the other one. That's the same thing as this one right here. See how this red wick, the first one down below is longer than the second wick? Only when it's this, there's 4 candles or 4 or 5 or 6 or 10 or 7 or whatever amount of wicks there. No, we don't, that doesn't count for the exception. If there's just these 2 candles here with wicks and we have almost matching, but the first one is slightly longer than the other one, that counts as an exception. Why? Because again, we had this explosive move, boring candle, and explosive move out, where this wick right here was established. It couldn't even get through that wick and it took off just with a 2 count. Price never came back in here and never tried for a 3rd time, never tried for a 4th or 5th time. So that counts as the exception to the rule. You'll see this in more examples where we'll have multiple wicks in here and we do the count. And that's, again, the first rules that we went over. But the exception to this is this pattern right here. So you're going to see it. The more and more we do this, you guys are going to see it. So does that make sense? Anybody have any questions right now?
I have a question.
Go ahead.
I just have a question about the boring candle. Like, what's the purpose of identifying it?
What the purpose of it is again, okay. So when price has been going up, they tried to bring it back down. Price moved back up, right? The buyers were in control, right? You would say the buyers are in control, bringing price up. And then for whatever reason, the sellers came in, started bringing price down, trying to chew through those buyers, say, hey, and for price to move down and close, there were more sellers than buyers. That's why we have this close here. But as soon as this stopped again, that pattern, that downward potential trend, this was, at this time, this was uptrend with the setup, right? Red action, green anchor, not engulf, lows in control, not breaking the low of our anchor. We're uptrend with the setup, right? Boom, then we get a close below. That violated our uptrend with the setup. So we're up with the setup, we're uptrend, but the bias is still up, but we violated our anchor, so it's sideways. When it's sideways, we don't know who's in control. We had a trend, the trend was violated, giving us an indication that we might be having a trend reversal. We don't know yet though. So as this happened, the sellers came in and kind of started beating out the buyers, bringing price down. Okay, sellers are taking over, boom. But then we get this strong move, stopping the sellers, strong move, bringing price up, right? So we know, hey, we were able to come in, stop the sellers, have an explosive move out of there. Once that had happened, sellers are going to come back in and try to take back over and keep moving it down. They weren't able to do it, though. There was a big fight. We want an area of interest. There's a fight going on. We don't know who's in control right now. There's a fight going on. It's going up. It's going down. Who's going to win? Buyers won, closed way out, closed strong explosive move out of there. This boring candle tells us Again, we were able to stop this downward movement, have an explosive green candle up. Okay, boom, we just potentially stopped that downward trend forming. It closed here, it opened here. They tried to take it up, they tried to take it down, but it closed right back where it opened. That means that there's lots of people interested in that area. Some are trying to take it up, some are trying to take it down. But when we get that small body, that boring candle that closed near where it opened, no one has won yet. Eventually, orders are always coming into the market. People are market ordering. People have orders sitting there. People are trying to send it one way or the other. The boring candle tells us this is an area of interest. We had a strong move in. They were interested in taking it up. They were interested in taking it down. It's an area of interest. It's a hot zone. But when it's boring and it closes close to where it opens with wicks on either side, you need to have the wicks on either side. That just means that it's an area of interest. Someone's trying to take over and win. The buyers took over and won, right? Strong move in. There was a fight. Someone was trying to win. Buyers beat the sellers because it's boring right here. It's going both ways, but no one is taking control. In order to take control, you have to close above where the fight starts. The fight started and ended exactly where it was, so nothing had happened yet. It still could be anybody's game. But then once this took off, that meant the sellers were beat out, the buyers took over. I don't know if that makes sense or not. It's kind of like a lot of this stuff it's really, just know that this is a boring candle. Know that this is an area of interest. There's a fight here and the buyers took over. It's using all of these rules though. The explosive move in, stopping this explosive move in, basing out, a fight happened, close to where it opened. This candle actually moved. Let's see, what did it move? This candle moved almost 11 pips, but it opened and closed within a 0.4 of 1 pip. So again, there was a lot of movement here. They're really trying to take it this way. They're really trying to take it that way. There's a fight, but it closed right where it opened. Okay. It's boring because no one was able to take over. They're evenly matched. But then when they ran out and there was enough buy orders still sitting here, because when this had happened, there's buy orders in here also with this wick. Price came into here and there was more buy orders than sellers. Let's say there was 10 people sitting here willing to sell this, right? Trying to sell them. Market orders, right? When price was coming back down, but there was 20 willing buyers in here. They got through, they chewed through, 10 of them got through, boom, and price shot out because the 10 sellers ran out and there was still 10 buyers left in this wick and price took out of there. And just whether you completely understand it right now, just know that that's what that means. And you'll see it time and time again as we go through this. And as you continue to learn this, you'll just see how it works. And so through understanding and just knowing like that's what's going on there. Does that make sense? Or
Yeah, it's starting to make sense now.
Okay, cool. So all this stuff that I'm pointing out with you guys, it's just, and I'm really trying to get deep into like understanding the mechanics behind what it actually does mean. But like, regardless if you actually understand what is a boring candle, and you should understand what it means, just know that, hey, that is a boring candle. When I have an uptrend with the setup with the strong move in, a boring candle, a strong move out with white space and or the exception, that's fresh and authentic, that's a good zone. Also, you see at the bottom of the sheet, time at level creation. I really only look for levels that were created during the London session. The London and or US crossover, meaning the portion, like London session opens Central Time, 2 a.m. and closes at 10 a.m. Central Time. And a lot of y'all on the East Coast, so that'd be 3 to 11. US comes in the market 7, 8 a.m. depending upon where you are in the country. So I only look for levels that were created. Why? Because London session controls 65% of the market. 65% of the trading all day long in the 24-hour market happens during the London session. That means there's a lot of volume, there's a lot of money, there's a lot of big money in these zones. For this pattern to happen, it's leaving us a clue. These charts are maps. There's clues on here of what big institutional order flow is. These people trade the same way every time. They actually leave patterns and clues on the charts for their friends to see, for their, giant, I'm talking huge mega institutions, multi-billion-dollar trading firms, whatever you want to call it, large banks, countries trying to move their monies around, big, large companies that are trying to make payroll, so when their buddies come back, they see, oh, that's a zone. Yeah, they're moving it up. The price comes back in here. Yeah, have your orders sitting here. Let's do this together. Our big money, they're working against us. Most people. What I'm trying to teach y'all to do is the patterns that they leave for us behind on the chart so that we can just hop on the back with them. They're the giant whale, we're the feeder fish. We're not controlling the market because who here has billions of dollars and trillions of dollars? None of us. But if we can identify where they're leaving us clues on the chart for when price comes back to it, that it's going to continue moving in that direction, that's what I'm showing y'all how to do. And these are just clues. These are patterns. This is a picture that they leave behind for us to keep taking price where it's going to be going. So again, let's kind of recap. We had up with the setup, right? Red action, step one, ignore, green, anchor, high, low. Look to the color to the left. There's a color to the left. These two red, bigger than our green. No, it's not. Mark the high, low, go high across over here, low across, hits the wall, green wall down to the color change, boom. Okay, what would happen more recently in time? Low side, okay, if the low side happened, we are an uptrend. Step five, do we have a setup? Go back to our action candle. What color does our action candle need to be for a setup? Needs to be red. We have red. Okay, cool. Step six, is there an anchor break? Is our red action breaking the low of our anchor? No, it's not. Okay, cool. We are uptrend with the setup. I would then go, I would start, so on a daily, multiples of 6, I would go down to a 240 4-hour chart, start looking for my zone. See how originally, when I had done this, I did this whole box right here, right? Why did I do that? Because of that wick here and this wick here. I know there's at least somewhere in this area. We like the even wick on wick overlaps. We haven't had well, actually, when we go to the smaller time frame, we do. I showed you that. We'll go as we go down. But I know in here, for me, just trained doing this as much as I had, I can look at everything that we just did. I can do in less than a second, 2 seconds, depending upon what it is. So on the 4-hour, I saw this area here, just kind of breaking this down on the 4-hour. Does this not, is this not a big explosive candle here, right? A big explosive candle with white space and a big explosive move out, right? Y'all see that? So I know, even though we're on the 4-hour, I know, hey, this is an area of interest because I know how these candles, and you will too, start to break down as you go down to the smaller time frames. I knew somewhere in this pattern, we'll go ahead and try to mark this small box like that. Somewhere in here, there's going to be something interesting. We started at a 4-hour chart. Why multiple of 6? That's the first place you want to start. But I need to get a better picture. I'm not able to see everything on the 4-hour, so I'm going to move it down to an even smaller time frame. Next good one to start with is an hour chart, right? I showed you how there's kind of this pattern. This box represents how it all looked on the 4-hour, but then I liked this. Let's get this back out of here. I just wanted to show that was on the 4-hour. Then I showed you all this pattern here first, right? On this hour. I got price moving in here. Again, the move in isn't all that great looking, but I have a very strong move out. This very strong candle here. But again, this isn't a perfect wick on wick overlap. But I know, again, when I break it down even smaller here, either way, this is a strongish move in with white space, right? And a strong move out. So even if I didn't go down to a smaller time frame, I could just know how it was on the 4-hour, see this here with white space. I know on a 60-minute, this is a strongish move in with a very strong move out. Once you've done this enough, like, okay, you're good right there. But you know what? Actually, I'm still not getting the full picture. I still don't really know. I know what's happening, but I want it to be more clear to me. 30-minute, boom, there it is. All right, strong move in, boring candle, very strong move out, white space. Again, the white space isn't as much as we would like to see, but we have the exception of the rule. The exception, we have the longer wick, with the wick almost matching it, but not quite. Just 2 here. There can't be any more than that for the exception. So I have strong move in, boring candle, strong move out. Boom. Fresh, price hasn't been back into it. Authentic, because it's a rally-based rally. If we were talking about the drop-based rally, then we would check. We would look to the left until we hit a wall. We hit a wall. We know that it's authentic. Okay, cool. So we're fresh. We're authentic. What time was this level created? It was created at 2:30 in the morning. You see down here on the very bottom, it pops up the date and time, 2:30. 2:30 in the morning. Okay, cool. So I have everything that I'm looking for a good zone. I like this zone. This is a pretty looking zone. On top of that, it's at the bottom of the anchor. So it, a lot of times it'll want to get to the bottom of the anchor, find a good zone and take it up. But what else has been happening also though of this? Let's see here. Should probably show it better on the 4-hour. Okay, what's price? Okay, let's see here. Again, this line and this line is our anchor, right? That's our playing field. You can kind of see this pattern here, right? Kind of see the same thing. What did price do? It kind of came into this area, traded a little bit below, but it's brought it up. It's still moving its way down. I don't like that, seeing it from the start, just because usually this is a big anchor, actually. Let's see, how many pips is that? Yeah, it's a 200 pip anchor. So this example, when you have an anchor that's that big, a 200 pip anchor, there's going to be so much more stuff happening on these other time frames, because even if this continues, you see how for this to continue to get above the anchor and for price to keep moving up, that's a lot of movement. Like right now it's at 100, but there's so much stuff that needs to happen on the smaller time frame. Like if we're on the smaller time frame here, do you not see, okay, we're up with the setup on the daily, but you see like right here, you know, when this other stuff is happening, green, what do we have here? We got green action, right? We got red anchor, right? Is it engulfed? No, the green to the left's not engulfing. Who's in control? The highs or the lows? We take the high side, we go across till we hit a wall. We hit a wall here. There's our color change up above, right? Color change up above here. Low side, all the way back here, we can't even see it. Okay, so who's in control? The sellers, the highs. So if the sellers are in control, we're downtrend. In order to have a downtrend, step 5, what do we need our action to be? Green, right? What do we have? Green, right? Step 6. So we're downtrend with the setup. Step 6. Is there an anchor break? Is our action breaking the high of our anchor? Nope. Okay, so we're downtrend with the setup. Okay, let's just go ahead and. That's on the smaller time frame, because let's see here. On the daily, we're playing with this, 200 something pip zone. Price isn't always going to be going up, and it isn't always going to be going down. There's retracements. It's got to test levels, and it's got to continue in the way it wants to go and or change. So right now, okay, yeah, here on the 4 hour, as long as these keep staying red, I love this zone right here. It's a beautiful looking zone. This might want to come all the way down here from the top of the anchor, come down 157 pips to grab this. Basically, I think it was like 10 or 12 pips. I'm measure it right here. This is 11 pip zone, right? But yeah, it's 100, or right now it's 71 pips away from there. Okay, well, I want to trade now, and does price not also have to get back down to this? Okay, well, if price is way far away from there, how do we actually get to trade right now? We go to a smaller time frame. Yeah, the overall daily is doing this, but it's gotta be doing all this other stuff. It's gotta be going up and down on the smaller time frames. So if we use these same rules to give ourselves reasons to take trades, then we can get the in-between. And as long as this continues to stay red with no green in here till it comes to grab this, then we're still uptrend with the setup on the daily. Then we can finally take that zone, and hopefully we take a 10 pip zone. Just if we get to this other side, I mean, that's 159 pips, and then really, hopefully, we would want that to continue, right? Okay, but we're not there. The price is away, so I go to a smaller time frame. I'm on the 60-minute. Right here, I'm downtrend with the setup, right? Price is breaking. It's kind of doing its thing. It is sideways right now, okay? The point that I'm really trying to make to you right now is we use these rules to take trades. The higher time frame we're seeing up with the setup, but stuff needs to be happening on the other time frames at all times in order for it to get to the levels on higher time frames or lower time frames to continue in the direction. Okay, this one right here, to give an example. This here, you see prices dropping. It's dropping, coming back in, dropping, continuing to drop. It has to do that, and we could have rules at times for taking this to continue to take it down to get to an area that's hitting our higher time frame zone. The lower time frame, it can have a completely different trend. The higher time frame takes precedence because that's where the overall bigger movement is. But I can use these rules and take smaller time frame trades that either are going in the direction of our trend or they're counter trend, but it's following the rules on the smaller time frame. Let me try to give an example of that. This example is going to be more advanced if I walk through. This is a trade that I'm in. Do you guys want me to show that's going to be more of anchor break stuff, or do y'all want to continue on this road that we're on right now?
Go for it.
Go over this one? Or what we were doing already?
You can go over that one.
This one? Okay.
This one.
Okay, so let me remember what I did at the time. When did I get into this? Hang on a second. I'm up 70 pips in this right now. When did I get into this? What am I on EuroCAD? This particular one I got into yesterday at 12, but I was in it before and also closed out. I got in that. I think I got into that on Sunday. Hang on. I just want to get this exactly. Yeah, it doesn't matter. Roughly right over here, Sunday-ish. So let's start looking for that. Okay. And it's going to be, this is going to be annoying with these prices in the way. Okay. If everyone can pretend that everything, actually we'll draw. Okay. Everything this line and right wasn't happening. I'd keep it over here, but this price stuff's all going to be in the way, so you're not going to see it. This was down at the time, right? I had green action, red anchor, right? High, low. Take the high side. Oh, is it engulfed to the green to the left? No, it's not engulfed. Okay, take the high side, go across till I hit a wall. Wall hits right here. Boom. Low side. Let's do this too. Okay. High side, boom, hits the wall. Low side, boom, hits here. We go down until we get the color change. That's right here, right? Okay. What one happened more recently in time? The high side, right? Because we go across, we hit a wall, we go up, hits right here. That is on a daily. That is on July 31st. We take the low side, we go across till we hit a wall, go down till we get the color change. That was on July 20th. Okay, so that one happened more recently in time. Okay, so the sellers are in control. If the sellers are in control, we have a downtrend. If we have a downtrend, step 5, what color do we need our action to be? Green, right? We got green. Okay, step 6, is there a level break, anchor break? Is our green breaking the high of our anchor? Nope. Okay, so I know that I'm downtrend with the setup on the daily. Go down to a 4-hour chart. You see here, I have this, I call that a strongish move in. I've got basing. It's a boring-ish candle, but I know what that's going to look like smaller, and a very strong move out. Got strongish move in, boring candle, strong move out, right? At what time was that created? Roughly around 4 o'clock. Again, this is a 4-hour it's a 4-hour chart. So I have this drop, base, drop here, right? Strongest move in, basing, boring candle, strong move out, created at a good time. It's fresh and it's fresh because price hadn't been back into it yet. It's authentic because it's a drop, base, drop, right? Okay. So I like that. But hey, let's see what it looks like on a smaller time frame. I want to get a better picture. Okay. Go down to a 60-minute. Do we not? We have, see this big, strong move in? See that big red candle, strong move in, opened here, closed down here. That's a very explosive candle. I've then got boring candles. See all these boring candles in here with the strong move out inside of that pattern. So not only do I have a drop, a base with boring candles and a strong move out, then another base with strong move out, boring candles, white space, right? I can do the count on all this. Oops. White space, right? What's the count on that? One wick alongside a wall. There's established sellers still here in that area. Let's just go ahead and mark it. Boom, right? Then I go down below. I have this one wick alongside a wall, right? That's established. There's established sellers in there. Boom. Then I have here, I have this wick, one wick alongside the wall, right? Mark that portion of it. Make this even bigger so y'all can see better. Boom, right? Then I have these 2 down below, right? 1, 2. Got to mark that as well. We're just going through marking all these. 1, 2, right? Established, cleared, right? And down below here, the next one is this right here. 1 wick alongside a wall. Established alongside a wall, right? Not cleared out. So this is basically all white space, right? Except for this little tiny portion right here that's cleared out, the 2 count, right? We like that. That is, so we had at the time down with this setup. We saw this zone here on the 4 hour. We came down to the 60-minute, continuing to see a better time frame. It's like just magnetizing in, like how we're breaking these candles down. What's going on here? I have a very strong move in. That's a very strong move in. Boring candles with white space, boring candles, and a strong move out. Right? Cool. That's what we're looking for. We like that. We go down to a 30-minute if we want to see more, but we really don't need to. So now it's so initially, I think I took this trade on Sunday. Okay, so I want to say that. Oh, that's what I did on this one. No, I did a breakout trade on this also. This zone had happened, right? That's what the advanced thing I wanted to show y'all. This zone had happened. I saw that this had happened. I saw that we were at that time down with a setup on the daily. I saw there's a very nice zone in here, but as that's happening in real time, did I not? I'm gonna get rid of all these actually. This is gonna be more so the breakout stuff because I have this zone here, right? It's moving down, and then I got to close below it. Boom, I can market order that. And I like the zone just got formed. I love it, but you know what? I just came to the market. It's 8 o'clock. I want to be in this. I'm not in this yet. I'm gonna just take it. Close down below. It's a downtrend. It's a downtrend on the. It's a downtrend on the daily. It formed a good zone on a downtrend on the daily, but I'm not in the trade yet though. I want to be in the trade. Okay, well the daily is down. I go to on the 60-minute. I'm getting a close down below here. Take a market order. Boom into that, taking it down. That first ride down. Good for 120 pips, right? So at one point I was up. I want to say I was up that. Price turned back around. I was getting close to entry. I got back out of it. I re-entered this trade on, see how this price, we are downtrend with the setup on the daily. We identified that box. We have this box drawn, right? At the time when this box was drawn, it was fresh. It was authentic. We had the strong move in, strong move out, boring candles, good time of level creation, all the stuff we're looking for. Price had never been back to it, right? What did price do when it finally got back to it? Boom, it just poked its head in there, shot out for 67 pips. What did it do? It came in here and grabbed this little portion of white space, right? This white space right here, it just dipped its head in here, grabbed this white space and shot it out. Turned back around, came in here, kind of tested this area. I got back, I got out of this, I was in this, I got out of it. When I saw that it came in and tested the area, okay, that zone has basically been holding. This is when I got my re-entry on this one. And this one we'll break it down. This was, we'll go ahead and move this line actually. So on the 60-minute, at the time, everything, we're going to pretend everything here to the right isn't going on yet. At the time when we had these 2 green candles, right? That's our anchor. I'm sorry, that's our action. The red to the left, that's our anchor. Mark the high and low of our anchor. Step 3, is it engulfed? Yes, it's engulfed, so it's sideways. Normally, we skip that and move on. But it's okay when it's sideways because, it's sideways, yes, but who's in control? We still go across till we hit a wall, we go down, we get our color change down below here, right? This is where it goes from red to green, right? High side, we go across, can't see it. So who's in control at that time? The lows are in control. Okay, so it's an uptrend. Step 5, what do we need our action to be? If it's an uptrend, we need it to be red. Where we have green, okay, sideways. It was already sideways from step 3. But this is how you go from following these rules exactly going into anchor break rules. This is more advanced stuff. This is anchor break rules. This stuff over here, this first zone and price coming into here, this is meat and potatoes. This is daily down with a setup, price coming into that area, grabbing it and coming out. It wasn't enough at the time to keep moving it down. That's why I got out of it at the time. But price is moving up, right? As of, let's take this. I'm gonna take this real quick. Go ahead and pretend this is the live area, right? When this is happening, we had a red action, right? With a green anchor. Lows are in control, hits over here, sideways. It's not sideways, right? Action, Ignore anchor. Low side hits the wall here. That's the color change. High side way back here. Who's in control of the lows? What do we need our action to be? Red. We have red. Is step 6, is there a level break? No. So we're uptrend with the setup, right? We're uptrend with the setup on the 60-minute, but we're downtrend with the setup on the daily, okay? But I want to take this trade. What happens moving forward here? When this is either up with the setup or changed over to sideways biased up, when it's sideways biased up, yeah, on the lower time frame, the bias is up, but I'm also getting that sideways indication of, hey, on the lower time frame, that uptrend is potentially forming a anchor break or a trend reversal, continuing the larger time frame down with the setup based off of this zone. Again, this zone initially wasn't enough to send it down. Price came back into here, tried to get higher. If we go further left, there's going to be more stuff up above here, but it never, oh, look at that. I love that. The box that I have drawn here, you see how this wick never passed this right here? This zone that we had drawn with this white space included here, having this portion I drew, that box has been drawn. This wick never came and closed past here. So initially, on my initial order, if I hadn't gotten out of it, I would have had my stop slightly above here. You always have slightly above your box. Price never came back above here. It's this zone has been good to keep price. They tried to get through here. It came here, it dipped in here, came down. Okay, they tried to take it back. They couldn't still clear this zone, and it started to move back down. Okay, but I'm not in it. I want to be in the trade. I'm not in this trade. When I came back and looked at the charts, I wasn't paying attention. I came back and saw that price had already moved out of the way. But what was happening? When this was uptrend with the setup and sideways biased up, and then when I get this close down here, as soon as I get this close, this red close down below this anchor, that's an anchor break. We're going to mark that. That's an anchor break. That's an anchor break. I got the close below here, right? Okay, then let's say this is real time. This line represents real time. So at this time, at this time, do I not have a green action, red anchor, high, low, not engulfed? What one happened first? High side hits here, low side hits all the way down here. Okay, so now I'm downtrend with a setup. Why? Because I have a green action. Step 5, is it breaking the anchor? No. Okay, so if you missed this overall trade but saw that later on, saw that it came in here, this zone held, it was still good, but I'm not in it. Price has now, this was up with the setup. We went from up with the setup to sideways biased up. As soon as we went to sideways biased up, that's an indication on the smaller time frame that we're potentially getting a trend reversal. Once I got the close down below there and the next candle opened, I went from sideways or up with the setup, sideways biased up to now down with the setup, right? It's figuring its thing out, But then as it continues to close below, breaking the anchor, closing below, right here, we could have just market ordered. Market ordered right here, boom. You could have this whole area as your zone. However you want to do that. Again, as we go through this more and more, you'll start, I'll actually give you all a set of rules to do this. But what I saw in this, I was in the trade, I got out of it, but I saw that it came back into the zone, closed below here, stopped the uptrend, started a new downtrend on the smaller time frame, kind of was figuring its thing out. I waited until I got this close below this anchor right here. That's when I got my order. This line represents my order. So let's say in real time, let's move this out of here. I got the close below this anchor, right? Price retraced, came right back to where this anchor closed. Y'all see this. You can either be super aggressive and take, when this is figuring out its sideways thing, it's going from up with the setup, down with the setup, all that stuff. I really break this down in my last session, the 4th session that's on the recordings. I spent like an hour on this. So it'll really make sense from this one. I'm just kind of trying to not spend that much time explaining this. It'll make a whole, I hope it's making sense now, but if you watch that 4th video, I spent a lot of time on this. This, you can even see here, this is where it's starting. This red anchor, right, this red right here broke that anchor. That was an old anchor because it was green, but we're red. So at one time, this was an anchor, was it not? When this red was the action, that was an anchor. Okay. When this green at one point was the anchor and this was the action, this broke that anchor. This broke that anchor. This based out and broke that anchor. So you could flat, and we're on a 60-minute. We could be looking for, if we go down to like a 5-minute chart, you're going to get a 5-minute close below. If you're trying to be super aggressive, you can get a 5-minute close below this anchor line. For those of y'all have seen this before too, is this not a pretty solid wall or a racetrack, as we call it? I think I touched on that in the second session. I spent a lot of time on that. We don't want the wicks. The wicks are established orders. That's what can send price up. But here, when we have a solid wall like that, especially on the 60-minute, once price is able, the sideways action, once we're able to figure it out and get a close below here, because also when this closed below here, violating all these anchors, when this was going on, it was up with the setup. This was up with the setup until we got a close below, stopping the up with the setup. Then as soon as that green candle came in, we're then down with the setup, getting closes below the anchors. So I can just market order and it's going to clear this wall. See what happened when price closed below here finally? If we could have had a 5-minute chart, could have been on a 5-minute chart, gotten that 5-minute close, we're at least going to get down to the bottom of this wall. That's for a quick 22 pips. See how price traded below, never came above, traded below, came all the way down, came here, still tested that area, that line, that anchor break line. These anchor break lines are super important. That's where it stopped. There's all this. They're trying to figure out who's in control, the buyers, the sellers. The sellers finally exhausted that, broke the anchors, got closes below that line. That's letting us know, okay, hey, sellers, we had the uptrend over here. All this stuff right here is stopping this uptrend. And then as we're getting the anchor breaks down, breaking these green anchors, that's telling us, okay, this fight is happening, but the sellers have taken control. They're fighting it out. They finally got their close below here. We want the close below here. We get the close below here. We can market order on a 5-minute. Let's look at it. Let's look at it on the 5-minute quick. See, even here on the 30-minute. Okay, so we get it even down below here. You see red close there, boom, red close here. It's going to the 5-minute. It's being more aggressive on the 5-minute, but also you can minimize your risk. This is that anchor break line. Boom, we get a close below here. Okay, yeah, this will be cool. Right here, right? We get this red close. Please, there we go. Sometimes these charts kind of go crazy. So again, we're going to pretend, everyone, you guys are smart people. So this is live, right? I'm going to move it back to the left just to give you, actually, you can see it right here, fine. We finally, on the 5-minute, so as we're down with the setup on the daily, we were up with the setup, I think, on the 4-hour. Then on the 60, though, it respected that zone, and we're getting anchor breaks, breaking the 60-minute. Yeah, the 60-minute was, remember, you guys remember the example, all the stuff over here was up with the setup on the 60-minute. Then I started getting anchor breaks on the 60-minute chart and the 30-minute chart, breaking the 60-minute anchors. As that happens, I could be waiting. Do I want to wait? Do I want to go ahead and wait for 60 minutes and get a close way down here? It might be safer, but I want to get in this now. I don't want to miss this trade. Do I not get a 5-minute close down below the anchor break line? Really, I get it right there. But continue. So I could have just been a market. That was our first close right here, right below that anchor line, right? I could have market ordered right there with the stop. Where would I? Does anyone know where would you want your stop? Does anybody know the answer to that question yet? I know it's not on the sheet. I haven't really talked about it. I just want to see if anybody's actually seeing what I'm about to show you.
I have in my notes, I don't know if this is right, but the stop loss below white space.
Yeah, above or below white space.
Above or below, yeah.
Yeah. Very good. So looking at this right now, I have action, right? I have these 3 green. When this red, I get this red close below here. Well, first off, what I would see, I would have my stop up above here. But let's break this down a little bit further. Why? Why would I do that? Because is this not a drop, base, drop, right? So I have a drop, base, drop, strong move in, right? This pattern right here, strong move out, base, base, strong move out, base, strong move out, white space, white space, white space, cleared out. Those are so close, I wouldn't count that as the exception, really, because those are so close. White space, strong move in, boring candle, strong move out, basing, strong move out, right? So I have that on the 5-minute. Okay, so if I just did the market order right here, as soon as this closed, boom, market order. I could have market ordered that I want to put my stop right above this pattern, this strong move in, basing with white space, strong move out. I'd want to have my stop above here. I'm in on that for 8 pips, or that bottom line. You want to be slightly above it too. That closes right there. Boom, I got to close right there. That's a 9.7 pip zone. I have my stop right above here, right? So that's just if I'm flat out market order. I know that I'm breaking the anchors on the higher time frame. I'm continuing the downtrend with the setup that we identified on the daily. There's a beautiful 4-hour and 60-minute zone that's been holding. It's been holding for days. It tried to get right to the top. It got right to the top of it, to the very last bit of white space. This will go back to why are boring candles important. Boring candles are important because that was an area of interest. That was an area of interest. The boring candle showed on the 60 real quick. That was an area of interest on the 60-minute. On the 4-hour, let's just see what it looks like on the, I'll give us a good picture on the 3-hour. On the 3-hour, right? Drop, base, drop. We'll go back to the 4-hour, or 1 hour, I'm sorry. I kind of just threw myself off with that. Oh yeah, the boring candles. The boring candles tell us, why are they important? They tell us this is an area of interest where they're trying to figure it out. There's a fight happening, they're trying to figure it out. When they get exhausted and takes off out of there, we know that it was an area of interest, but it was an area of interest with more sellers than buyers. So that gives us the clue, the blueprint that when price comes back to it, there were more willing sellers sitting here than buyers. Along with the strong move in, the strong move out, also with white space, also during good level creation, also fresh, also authentic. It's using all of that. It's been holding. Price tried to get to it to the last bit of white space. Literally, you'll see that time and time again. It'll come to the last bit of white space. That's where there was still more sellers and buyers. That's the clue that it leaves us before, and there's enough to shoot it out. So back to, that's why boring candles are important. Back to the 5-minute where we were just talking. Sometimes the chart will take you back like way back where you weren't ever even looking. Yeah, here's where we were. I'm gonna drive it home with this. I know it's 10:30. This is where price had come back into that area, respected this zone, and was moving out, right? As we remember seeing on the hour, that's where this was, when this was just, that was our action. This was up with the setup, right? Then it went to sideways, biased up. Then it went to, we got the close. Oh yeah. Pretend this is real time, up with the setup, right? Action, anchor, not engulf, lows in control, red action, we're up with the setup, not breaking the low, the anchor, we're up with the setup. But as soon as we get this green here, we go to the green happens. That's our action. That's our anchor's engulf. We're still up with the setup, but it's up with the setup. Or it's sideways biased up. My apologies, because it's engulfed. It's no longer a clear up with the setup. It's sideways biased up. But as soon as we get to sideways biased, normally we skip it on meat and potatoes. But this will start giving us anchor breaks and breakout trading. It goes from up with the setup to sideways biased up. That's like, hey, hold up, trend might be reversing. Then I get the close below the anchor, because as soon as that goes red, that becomes our anchor, or that was our anchor. That was sideways biased up anchor, but then I get a close below my sideways biased anchor. I'm now, that happens red, that sideways biased up, I get to close below, violating that anchor. It's like, whoa, okay, something's really happening here. Then as soon as I get my green candle, I instantly turn into down with the setup. Action, anchor, not engulfed, who's in control, highs, most recently in time, not breaking the anchor. I stopped the up with the setup in the zone on the higher time frame, down with the setup. Smaller time frames got to be doing different stuff to get to that zone. It gets to that zone. This zone holds, but we missed it. We came back and saw the charts. We came and looked, oh, that was so beautiful. Why were we not in that trade? Okay, we're not in that trade, but are we not stopping the uptrend, starting a downtrend, and then continuing to get closes below these anchors? Yeah, but I'm still not in it, okay? But I see that this is happening. I see this blue line I get the close below the blue line. We saw it more so on the 30-minute. We get it here. Oh yeah, we get it here on the 60-minute. It's way down here, right? Okay, but I don't want to take a risky breakout trade that closed way below here. Okay, where do I get it on the 30-minute? On the 30-minute, it's closer to the line. Okay, cool. I like that. Oh, I'm sorry. Right here, closer here. Okay, cool. I like that. But you know what? I don't want to wait 30 minutes. I don't want to wait for a candle close. I might miss it. It might shoot out of there. Okay, well, what did it look like on the 5-minute? Boom, on the 5-minute, back to where we were before. The 5-minute, remember we're talking about having, that was our first close below, right? This 5-minute candle closed below that 60-minute anchor break line, right? So I could have just market ordered right there. I'd want to have my stop up above this right here, the strong move in, boring candle, strong move out, boring candles, strong move outs. So I'd want to have that, call that my miniature zone for right now, right? With just a flat out breakout trade. I'd have my stop above here. But let's break this down a little bit further. Also at the same time, let's say I didn't get the breakout trade, right? Once this green candle started, this first green candle, okay, yeah, close below, what do I do? What do I do? Well, on the 5-minute, what do I have? I have action, anchor, not engulfed, highs in control, right? Because the low side's way back here. With what color? Action, green. I've got my green action, not breaking the high of my anchor. I am downtrend with a setup on the 5-minute. So if I didn't take just the anchor break line on the 5-minute with this 8 or 9 pip zone, does anyone see what the most beautiful part about this zone is? Out of this whole pattern, if you had to choose one area, is there any area that looks better to you than the other stuff, or does it all look the same?
Is this what you're trying to look for?
This is. I'm just trying to see where you guys are at with things, so I know how to explain things moving forward. That's really what I'm doing. Like I know exactly what we're looking for, but I just want to see if anyone is seeing it yet. And if you're not, it's perfectly fine, and I'll keep moving forward. Out of this whole pattern, what was the most pretty? I would say the most clear, obvious, is it not this giant drop with the one base, one wick, and the giant move out, right? That's the most explosive part of this. This big move in, basing, big move out, right? So if I didn't take the flat out anchor break right here, and I saw that I was downtrend with the setup, or I'm sorry, yeah, downtrend with the setup, I can take this whole pip, but the beautiful part about this, a lot of times where that formation happens, where the strong move in stops, the boring candle begins, that's where it's uncertain. Someone's trying to take it one way, someone's trying to take it the other. The open is very close to the close. That's a boring candle. That means that that's an area of interest. No one was able to take over until here, where the buyers were exhausted and I had an explosive move back out of there. Seeing this whole pattern here, this white space is mostly cleared out. That's good white space, that's good white space. But just looking at this on a 5-minute chart, it wants to get to that, where did this move originate from? This is a drop base drop, but the origin of it starts right here. This is where it's cutting through all this white space, all this uptrend happening here. That's why when we look, is it fresh and authentic? Yes, because it's a drop-based drop. This dropped through all these buy orders that were previously here to the left. This dropped, wall cleared them all out. There was still a fight trying to get through this stuff, and then the explosive move out. That cleared out all these buyers here. The fight happened, and it continued to move out. That was where the origin of this big drop right here that got us a close below our anchor. The origin of that is right here, because this is where price was able to clear through these buyers to the left, base out, have the fight, area of interest. There's a battle going, trying to hold this ground over here. They beat them out. The fight happened and exploded out of there. Okay, then we got the close below on the 5-minute, below our 60-minute anchor, violating the anchors moving down. Y'all remember seeing that, the anchors moving down, violating those, breaking the upward anchors to the downside. Got the close below. I could market order here with the stop above this, or I could just take the 5-minute down with a setup, knowing that it really wants to come to this area right here for this 1.9 pip area. So I could just be taking that on the 5 minute, and that's good for a quick 18 pips. I could have just taken this area right here with the stop above. That's good for a quick 18 pips. Okay, cool. But guess what? We're using 5 minute stuff. So there's a reason and a rhyme to get into this trade, to take it with a 2 pip risk to grab a quick 18 pips. This is not something, this right here, could it hold? Absolutely. But in reference to this whole zone on the, it's a 35 pip zone. Are you really wanting to trust just 2.2 pips for your whole protection on that? No, you probably want to take it bigger, but this is giving you a rhyme and a reason. You're now down on the 5 minute, having it down with the setup. Could have had the anchor break here. Could have had the retracement to this area, good for the pips. Or, like I said, I saw it on the 60. I got the close below. I used the 5 minute. When I got the close below here. I had the retracement back to the line. It retraced here. That's where I got my order. I didn't take the flat out. Just close below on the 5. I don't think I did on the 5 minute. And if,
Hey, Michael.
yeah.
Hey, so I'm really loving it so far. I just wanted to ask you a quick question to
Absolutely.
what white spaces are.
What white spaces are? Okay. White space is wicks alongside a wall, meaning wicks, see these wicks here, along the body of a candle. Wicks along the body of a candle. I'm assuming are you a new student?
Yeah, I'm a new student. Like, this is probably like the first video I've watched.
Okay. You're definitely going to want to go back and watch the recordings, because this is like, we're going over like really more advanced stuff.
Okay.
The first and second session, really, they talk about white space. The fourth session, I touch on white space pretty good. Now that I remember, that fourth session is going to be really good. But just since you asked the question, real quick, white space is always going to be these wicks alongside a wall. Wick alongside a wall. You got to break them down and do a count. Just to give you a quick example, like right here, I know this line's blue, but pretend 1, 2 wicks alongside a wall, we call that cleared out. That was established orders there until price came in here and cleared it out and continued to move down. But up above, if there's a 1 count or 1 wick, it counts as there's still willing sellers sitting there. So when breaking down these boxes, these patterns, you want to look for a white space, a 1 count, a 3 count, a 5. If it's even numbers, there's still established orders there. If it's odd numbers, they've been cleared out. But again, I'm really going to you'll really see that on the recordings. I spent a lot of time breaking that down. We did that earlier today too. You good for now, or do you need me to go a little bit further?
No, I really understand it with like the buyers and sellers, and when they come back into price and stuff like that. It really does make a lot of sense. Thank you.
Yeah, no, you're very welcome. You're very welcome. So when this had happened, right, we got the close below here. It's not always just going to be the breakout. Sometimes the breakout just continues, but a lot of times it wants to retrace back to the anchor break line. Retrace back, have a reason to get into it. Boom, you get into it here. I don't want to have my stop up above. Really, when I did this one on the 60 minutes, see how these are all 60-minute candles? I'm breaking the anchors. I've got the basing out, and then I start to continue breaking the anchors, continuing down the downtrend. That's a downtrend. Breaking the anchors, downtrend. But I had this whole sideways action. That's why I either took the retracement entry, or I just did the flat out 5 minute, and I see where I had my stop. I put my stop up above all this. Why? Because on the higher time frame, you see it more so on the 4 hour. On the higher time frame, is this not a base drop, right? Strong move in, that's a boring candle, that's a strong move out, right? When this had happened and this closed, and I had this red close, these 2 red closes down below here, and I got the green, that was my action. This was my anchor, right? Not engulfed, highs in control, green action, not breaking the anchor. I'm down with a setup on the 240. I'm down with a setup on the 240 with a retracement on the 60, with the retracement back to the 60-minute anchor break line. It's got to break on a 60-minute before it can break on the 4 hour, right? Because there's 4 60-minute candles inside of that. but I have it down with the setup on the 4 hour. The higher time frame always takes precedence. The smaller time frame is going to be changing trend more often. It takes a longer period of time for the higher time frame to change trends. So I had down with the setup once that candle was green on the 4 hour. Also, this 4 hour broke this anchor, did it not? We only see it once here because we're on the 4 hour, but we see it 1, 2, 3, 4. We see it 4 times on the hour. Why? Because there's more hour candles inside of a 4 hour candle. We only see it, what was it, once, I think I said? Is that what I said? We see it, yeah, we see it only once here on the 4 hour, but we see it 4 times on the 60 minute. Okay, well, I know that I'm down with the setup I'm down with the setup on the 4 hour. I'm breaking the uptrend on the 60 minute. I'm breaking the anchors on the 60 minute. I'm forming new downtrends. I'm breaking the anchors. Okay, why not keep, when this is down with the setup, why not have my stop above, just trying to make this more simple to see, why not have my stop up above all this on the 4 hour that's still inside of my daily original zone that I had. Like, honestly, if I wouldn't have closed out my position, I would have just still had that order working. And, it's from that entry point, it's 87 pips right now. So hopefully this is making sense. Again, I think I explained this a little bit better on the 4th video or the 2nd video. I did this a lot on the 2nd video. But this whole style is about using all of the information. It's about getting the picture that you want to see. At one point, I was down with a setup on the daily. Okay, cool. I had a beautiful zone. We started to see it on the 4 hour, this drop, base, drop, right? Boom, beautiful zone. We want to get a better picture. That's just, okay, down with the setup on the daily. It's a beautiful zone on the 4 hour. I want to see it more. Okay, 60 minute. Okay, yeah, I see it. 30 minute. 30 minute, you see all, we got white space, we got drop, base, drop, got strong move in basing. I mean, we're using a time frame to see the picture, right? So that was our original zone. That's all holding, okay? But yeah, we're not in it though. We want to be in it. So when we want to be in it, we're seeing that the higher time frame zone is holding, but it's got to go, when price was down, that it had to get up to get into that zone. So in order for it to get up into our higher time frame down with the setup, does it not? If price is down here, this formed, exploded out of there. Does price has to form uptrends to get back to our zone. It did that here, shot it out for about 70 pips, came back in, uptrends, because it has to go up if it's going to get to this area. It came up, took our zone, the full portion of our zone, then started to violate and break the smaller time frame ups with setups and anchors. The smaller time frame, it needed the smaller time frame up with the setup to get to the higher time frame down with the setup, because the higher time frame takes precedence. And as that happened, if we're just looking for reasons and rhymes to get into this trade, once we start seeing the anchor breaks, once this has already happened and we missed it, we came back to, okay, I came back to the chart, saw this going on. Okay, this zone held. I'm anchor breaking to the downside. I've got a retracement to the anchor break line. Came back, okay, I'm in right here. I'm gonna stop above here. If you're being super conservative, or not conservative, if you want to have a very little risk, you could have, when this had happened, you could have taken the retracement here. Is this not a drop, base, drop, white space? Again, we'll see it better on the higher time frame, but that's white space right here. Okay, that's what I want as my zone. I want this little area right here, this drop, base, drop. Again, it's a strong move in. It's a strongish move out. Not that great, but I have white space. I know that that's the area for this to happen, for this anchor to break this, for this action to break this anchor and this anchor and this anchor and all this stuff. Price was fighting for it, but it left us the clue, the one wick, the white space. It left us this clue below to shoot out of there. They tried to keep taking it up. They couldn't. The fight happened and they sent it out of there. Okay, that's a wick alongside a wall. That's a clue that lets us know, hey, there's still willing sellers here. Wick alongside a wall, retracement to an anchor break line. It came right back to it and it's never been back. And so now, right now it's 68 pips. It's been as high as 92 since this happened. So it's multiple reasons to get into a trade. You're using all the time frames to understand. You're trying to understand the overall flow. What is going on and why? I'm down with the setup on the higher time frame that takes precedence. I had a really good looking zone. That zone has held. It's breaking the uptrends it needed to get to the zone. It's retracing back to the anchor break line because a lot of times it just wants to retrace back to the anchor break line. I can't tell you why, it just does. Oh, let's show how and why. We're going to go ahead. I'm going to mark this pink.
Hey, Michael.
Yo.
Where would I find an anchor break line if I was looking at like a random pair, you know, like and I haven't touched it at all, like I haven't marked it at all, like how would I know like what's like a confirmed anchor break line?
Okay, I'll show you that real quick. I'm gonna give you the example here, and then we'll go to something different. Okay, when this price, see how this price came down, right? Did price not at one point? And we move this line again just so we can see this more clearly. At one point, this was the current candle, right? We're just going to say this one candle is a current candle, right? That's our action, right? This would be our anchor, these two blue, or two green, right? They're engulfed. Okay, so it's sideways, but who's in control? High side, boom, hits here. Low side, boom, hits here. Ooh, that's an interesting one. They're so close, right? They're so close. What one happened more recently in time?
The one on top.
The one on top, right? Cool. So yeah, sellers are in control. It's sideways biased down since the sellers are in control, right? Because it's engulfed, so that already tells, it's engulfed, so that already tells us that it's sideways. But what's the bias? The bias is down. Why? Because the sellers are in control, okay? So right now we are sideways biased down. But back when price was right here, was this not their action, right? This was our anchor, right? Anchor's engulfed, right? Who's in control though? Highs or the lows? High side, we go across, it's way back here. Low side, we go across till we hit here, right? So the lows are in control. The buyers are in control. It's still sideways. It's sideways, but the bias is, I don't want to confuse, I'll get that out of there. It's way back here. It's sideways, but the bias is up. Why? Because the buyers are in control. Then when we were right here, this was our action. This was our anchor. Highs, lows, not engulfed. Who's in control? The lows are, right? With a red action, not breaking the low of our anchor, right? Okay, we were up with the setup to sideways biased up to sideways biased down. Why? Action, anchor, engulfed. High side hits here, low side hits here, right? So we were up with the setup, sideways biased up, sideways biased down, and then we go to, once this happens, up with the setup. Okay, well, how do I know what an anchor, how do I just see what an anchor break is? When this was going on right here, right? This was up with the setup. This was this pink line was the bottom of this anchor, was it not? So that was an anchor. At one point, when this was an uptrend, this was an anchor, right? Then when this happened, was this red not our anchor? This was our action. This was our anchor, right? Let's go ahead and mark that. Let's mark that, okay? That was our anchor, right? I'm gonna get some of this out just to kind of clean this up a little bit. Okay, that was an anchor, right? As we were up with the setup, sideways biased up to sideways biased down. When this was happening, that was our anchor, right? When this was happening, that was our anchor, right? So that qualifies as an anchor. That's the low of our anchor. This at one point was an anchor, so that's the low of our anchor, right? Green. Then we have our red. Once that's red, that's still an anchor, right? That's still the low of our anchor, right? When this was happening in real time, again, we'll call that real time. That was the action. That was the anchor. That broke the low of the anchor. Why? Because that was a green anchor. Our red candle broke the low of our green anchor, right? Because at this point, it was sideways. This was our action. This was our anchor. Sideways, because it's engulfed. What happened more recently, boom, the high side though. It's sideways biased down. Then we're getting the close below, breaking the anchor. That green was an anchor trying to bring price up. At one point, was price not trying to move up? Yeah, it was trying to move up. It closed and price came down, but that is an anchor. This candle closed below that anchor. That's an anchor break. Because when this is red, that is our anchor. That closed below, that broke the anchor, closed below, anchor break. Looking further left, at one point when this was the action and that was our anchor, did this not also close and break this old anchor? Because at the time when this was going on, this was all fresh and authentic buy orders. Why? Because we were a rally-based rally. So that was fresh and authentic, up with the setup, fresh and authentic. But then this candle was able to close below this anchor. It wasn't the current anchor, but it was an old anchor. It was an anchor that continued this upward move, and it was fresh and authentic till price came back to it and closed below, breaking this anchor. It broke this anchor here. We're moving price down, red. Red broke green anchor. Red broke green anchor. Does that make sense?
Yes, sir.
Cool. So I'm just gonna, let's see. We'll put one other thing up just to kind of trying to show one more thing. Okay, let's break some stuff down just real quick too, just to show us a little bit more. Okay. Right now, what's our action? Red, right? What's our anchor? This green. This hasn't closed yet. It's a 5 minute. It'll close in 3 minutes and 17 seconds. But if this closes below, did that not just break that anchor and close? Yeah? Let's go back right here. This is our action. This is our anchor. It didn't close below. Okay. Let's keep looking left. Left. At one point, this was our action, was it not? This was our anchor. This candle closed here and opened here, and this was red. And this was our anchor. Did price close and break this red candle, break our green anchor? Yeah. It also broke at one point when this was green. This was green. That was our action. That was our anchor. It was engulfed. So this is sideways biased up, but that was our action. That was our anchor. Sideways biased up. This was up with the setup. Then it was sideways biased up. Then we broke that anchor and also closed below the red anchor as well, continuing our down. So when the next color breaks the color before it, that's an anchor break. Because at one point, when we were like this, that was the anchor. This closed below, broke that anchor. This close, not yet, hasn't happened yet. As soon as we get this close right below, right here, boom. That was the anchor, that closed below. This was the anchor. If we get a close below here, we just broke that anchor. If we get a close below here, at one point, that was the anchor, was it not? When this red action, that was an anchor. If I get another close below this, I just broke that anchor. I just broke that anchor. Moving down, it's these reds breaking these green anchors, moving down, continuing. This closes here, and as soon as I get a green, I'm now down with the setup. I'm down with the setup, breaking anchors to the downside. These anchors at one point, that's our playing field. When this happened, this drop happened at one point. That was our anchor, was it not? That was the anchor. That was the action. The action, anchor, high, low, hits the high side first. Sellers are in control. Up, it's down with the setup. That's our anchor. Then, boom, close above, right? That was the anchor. We just broke that anchor to the upside. Broke that anchor to the upside with a strong move in and boring candle. Well, as of this point, we had a strong move in, we had a boring candle, strong move out. I don't like this because we don't have a wick. But this still happened. Close, broke that anchor. Gave me a rally, base, rally, strong move out with white space, boring candle, right? The previous anchor before this, at one point, This was green, and that was our anchor, right? Did we not get a close above this anchor? And at one point, this was the action, and that was the anchor. Boom, did I not get a close above that anchor? These were, at one point, red anchors moving price down. Then I'm getting green closes above the old red anchors or the old green anchors, continuing up. It's breaking and closing above these anchors, breaking and close above that red anchor, breaking and closing above that red anchor, taking the uptrend. You know, sometimes, I don't know how much this is right here. You know, I mean, it's like 8 pips, whatever, but that was an anchor. Close. Once it closed above here, that's an anchor break. Once it closed above here, that's an anchor break. Once it closed above here, that's an anchor break. That make sense?
Yeah, I get it.
Cool. So yeah, we've been at this for 2 hours. If there's any last minute questions or you want me to go back over something real quick, I'll do that. If not, we'll probably get wrapped up.
Yeah, you definitely gave me an aha moment about the anchors, like just from this call, like just from me sitting on.
Yeah.
Because like I have traded in the past, so like I am understanding this like a lot. And when you were talking about anchors, it really helped me. It really helped me get the bigger picture.
Yeah.
But a question that I had was like, what time frames are you looking at? Like kind of like when you're doing like a top-down analysis, like starting from like the monthly, the weekly, the daily, like what kind of gives you that indication to be like, okay, I'm looking at this now from like the higher time frames?
Okay. Yeah, let's do that real quick. Like I said, typically every day, like I'm going to come through here. And again, my perfect world of trading is I'm going to look for higher time frame trades that I can find before I go to sleep that hopefully will hit my order while I'm sleeping and I wake up and I'm up pips. How do I figure that? For one, ATR, average true range. What does that mean? Some stuff that looks clear. Okay, average true range right this is 100. This is right now the daily on the pound yen is 100 pips. Okay. So right now this is flickering green, right? As soon as this goes down just a touch, it's going to be red, right? So we're going to pretend this is red right now. So in real time, I'm going to be scrolling down this list. Boom. Aussie yen. What do I see on Aussie yen? Nope. Sideways bias down. Aussie yen. Okay. No good. This, no good. Sideways bias down. New Zealand yen, CAD yen. Okay. No. Boom, boom. We'll get down to, okay. Pound yen, let's say that's the first one I'm clicking. Okay, boom, I see this automatically. I don't have to spend any time. I know what up with the setup looks like. We're pretending this is red. Okay, so that's our action. This is our anchor, right? High, low, what hits first? Low side hits right here. There's our color change. What do we need our action to be? It's not engulfed. What do we need our action to be? Red, it's red. Right now it is red. So right now on the pound yen, we are up with the setup on the pound yen. Okay. It's not breaking the low of our anchor. Good, we're good to go. Okay, so that's the daily. I'm going to come down to the right side to go through those rules. I'm going to look for a strong move in within, go ahead and mark it, within my anchor, change it back to black. Within my anchor is my playing field, right? That's my playing field. That's where I'm looking for a zone. So that's what it looks like on the 4-hour chart. Honestly, you know what I see right now? For one, that's a beautiful racetrack. On the 4-hour, there's once below this point, there's no wicks, there's no anything. That's just straight wall. That's a racetrack. Price wants to get back to the bottom of this wall. So there's that portion of it. But I'm going to come through. Let's just put that aside for right now. I'm up with the setup, starting to break it down. I don't see anything on the 4-hour. Okay, let's go down to a 60-minute. Okay, on the 60-minute, what do we see? I see these 3 patterns right here on the 60-minute. See that? See that? And the prettiest is going to be this one, but when we get smaller. What do all these mean? This was a drop, a base, rally, right? Yeah, at this point, it was a drop, based out, rally. You'll see that when we break it down in the smaller time frame, but as of this point, rally, let me start over. Drop, base. Actually, was that to the bottom of I just moved that line. See, you got to pay attention. See, I even did that. You got to pay attention to your anchor. This is actually down below our anchor, so we really technically wouldn't want to do that right now if we're looking for a zone. So we'll take that out for now. up at the setup, 4 hour, that's our playing field. I don't see anything on the 60 minute. I see this area here and this area here. Why this area? Because it's a strong move in, boring candle, strong move out, white space, right? That's kind of like text. Well, I wish that move out was stronger, but, and then up above that, what do we also have? We have white space. The biggest clue to look for one is white space, just flat out plain old white space. Then figure out the move ins, the move outs, and all that stuff. Because we go down to a smaller time frame, I bet you this is a 60 minute. I bet you on the 30 minutes. Yeah, here we go. Strong move in, boring candles, strong move out. You kind of see it. On the 60 minute, you see it. I guess you see it better on the 60 minute with this portion of it. The move in, boring candle, move out, right? I don't think this is beautiful. I don't like this. I don't like this. Why? Because I have this wall here. Remember some of the other ones I showed you were the very clear rally-based rally, one boring candle with white space and a very strong move out? We like that because that shows us where that fight is. That shows us the move in, move out. I don't really have the move in, move out. So although this is here, we have a move in, boring candle, and it's kind of, this is a boring move out. I mean, is that, anybody disagree with that? That's almost a boring candle because that wick is almost as big as a body. That's a boring candle. This is a move out, okay, but you know what? I don't love it. 30 minute. Oh, I have this right here. Let's look at it on 30 minute because this is a strong move. I have white space. That white space should mean that there is wick on wick overlap. We like wick on wick overlap. See this portion right here? I know when I go down, we're going down to a 5 minute on this. This is for right now though, this is a move in, strong move in, boring candle, strong move out, right? You see that overall movement of this, right? Strong move in, two boring candles, strong move out. You see it more clearly on the 60 minute just because of that closer to wick on wick overlap. But what does wick on wick overlap mean? We see it here on the 30 minute. I'm going to show it on the 5. This is not strong move in, boring candle, strong move out. Yeah, it is. So you got, hopefully you guys are seeing that and that makes sense. But so to kind of go back to finish answering your question. So normally I'm going to come through, like literally everything I just spent probably the last 7 or 10 minutes talking about. I'm doing this in this whole overall thing, maybe 3 seconds, 3 to 5 seconds. I see this right here. I don't like this. If I'm looking to do anything, I'm not in love with anything right here. What I really like is this wall on the 4 hour. If I can get a close below this, see, as of right now, the only white space that's here on the 4 hour is this right here, right? This was an explosive move blowing through all these anchors, right? Okay, is price, do y'all really ever see it? I mean, yeah, it does it, but is price usually just going to keep on going, keep on going, keep on going, keep on going? No, it's probably going to turn back around and retrace and come back in. But once it gets past this line right here, this last white space that we can see on the 4 hour, I really don't see anything below. So me personally seeing this, I'd be more so, this line represents that. I'd be looking for a close down below here, really down below that little section right there, and trying to grab the rest of this wall, which would be 91 pips. If I had to honestly guess, and not even really guess, what was it? Yeah. Not saying this is going to happen, not saying to take this trade. Knowing just how all this usually works, this is probably going to clear, eventually going to clear all this and probably grab this and continue up. Again, it's not the clear picture that I'm looking for, but knowing how this stuff starts to work, and if I can start getting through these wicks right here and then grab that whole portion of white space, and it's going to battle through here and then clear the rest of that, that's a good thing to look for. But okay, let's go. Okay, we don't really have anything to take right now. There's really no good looking zones in here. We have this zone and this zone, so we could have our orders there. I don't like these zones. So I'm going to keep scrolling. I'm going to go to the next pair. Daily, sideways bias down. This is sideways biased up. No good. At least for this portion of it. New Zealand. Okay, here we go, New Zealand. So here on New Zealand, we're down with the setup, right? 4 hour, don't really see anything. Go to the 60 minute. Boom, right here on the 60 minute. Really, it could be this whole pattern, but on the 60 minute, right? Is this not a drop, base, drop. Is this not a strong move in? Boring candles, strong move out. Yeah. A little bit of white space here. This white space is cleared out. Above here, I have a 3 count, right? 3 wicks. I'm going to just mark that line. The chart's not letting it. 3 wicks alongside a wall, right? You still got to, for you that had the white space question before. So that's all good, right? White space, 1, 2, 3, 3 count, established, cleared, established, that's good. Wick above, established wick alongside a wall, that's good. So I have white space in here. This overall zone is 17 pips for that portion. Like I said, this is cleared out. You could count the whole thing. Originally, we have several things going on. We have a drop. This is a strong move in. This is basing. And then is this not dropping out? It's not an explosive move out of there. It's continuing the basing again, but that's a strong move out. So it's like, hey, do I want to take this whole thing, 24 pips? Do I want to take just this last portion of white space, 7 pips? Yeah, I could do that. I could take this whole box. But again, it's about the clear picture, the stuff that I've been showing y'all. You see here, actually, you kind of see it on the 4-hour. We now have a drop, boring candles, drop, strong move in, boring candles, strong move out. Yeah. So that is a zone. You then have to just ask yourself, does it meet all the other rules? Is it going to meet for a good trade? And the clearer picture we're looking for, again, is the rallies, the strong move-ins, the boring candles with white space and strong move out. I'm not in love with this picture just because I don't really have enough white space for me, and it kind of hung out here for a really long time. Really, you don't want to have any more than 6 basing candles. We're on a 60-minute though, so it's okay right here on the 4-hour. I do have it, but most of these wicks are cleared out. It doesn't really count as the exception because I prefer this wick to be up higher. But it's not the prettiest picture for me. But following the rules, you're down with the setup on the daily. You have on the 4-hour drop, base drop. You've got boring candles. You do have white space. So it is a zone. Is it the right zone? Is it going to win? I don't know. I like very clear pictures. I like just a New Zealand pair. New Zealand pairs are New Zealand is very sporadic. So try to find a good example real quick of this right here. This is a good example. This is a very clear example. This box right here. At one time, when this was going like this, right? When I had this green candle, was that not my action? That was my anchor, not engulfed, highs in control with a green action. I'm downtrend with the setup, not breaking the high of my anchor. I'm downtrend with the setup. See how there's all this stuff going on? Boom, boom, boom. This huge explosive move, chews through all this, breaks all these anchors, closes, bases out, area of interest, boring candles, an area of interest, bases out, wick. This is a textbook. This right here is basically a textbook zone. If this body was a little bit bigger down here, it'd be even better. But more or less, this is more textbook. Strong move in, boring candle, strong move out, downtrend with the setup. We're on the 60-minute. What did price do? Came back in, grabbed this area. Usually you're going to go from the high of your wick to the bottom of your wick on the boring candle. That's going to be your zone. Unless you break it down to a smaller time frame and want to get, actually, we'll do that too. 60-minute. I bet if we go down and do a 30-minute and 5-minute, there's going to be more drop-based drops in here with some white space. But hey, I don't feel like doing that much work, honestly. I just see that this was down with the setup. This is a 20-pip zone. Boom, I draw a box. This is textbook. Strong move in, boring candle, white space, 1 wick, strong move out. Me personally, because as you all have seen the white space stuff before, you start counting 3s and 4s and 5s and 7s. Honestly, for the most part, that's too much work for me. Like, say this was the area of interest right here. I really don't feel like sitting there and counting and doing all that stuff. Why? Because it's not a clear picture. There's a big fight, and it's happening for hours and hours and hours and hours and taking off. This right here is just not almost crystal clear. It dropped, it based out, and it exploded out of there. And sure enough, what did price do? It came back in, just touched it and dipped on out, you know? So that's, you know, and it's moved out from there. It's gone, it's 88 pips. That's a 21 pip box for 88 pips. That's more than a 4-to-1. That's what you're looking for. See, this is much clearer. Is this not much clearer than, what are we on? USD? I think we're on pound yen. Pound yen before. Is that not a lot more clear than that whole pattern right here? So it based out as here, it's here. It's not saying it's not going to work, but that's more clear. I want one strong move in, a boring candle, and an incredibly explosive move out of there and just taking off. That's clear to me. I can see that. I don't have to take time. I don't have to count wicks. I don't have to do all this. You can go through that process if you like, but I'm trying to find stuff that's super obvious. USD, I think it was. Super obvious. Drop, base, drop out. And on top of that, you had this basing continue here. That's a boring candle with a drop out. And that was actually the retracement to it. That makes sense. That's retracement to it. But at this time, drop, base, white space, drop, move out. All right, we're more than 2 hours right now. Does that make sense? Any last minute question?
Yeah, Michael, I had a quick question.
Yeah.
So when you're looking at that base and then the drop and how
Yeah.
it comes up and then you take the entry,
Yeah.
Once you're up the 88 pips, if you move it to the right a little bit, I saw that there was like a green anchor, a little bit more. Right there. There was those two biggest, like those two big candles. If I see that anchor, would I consider that like an exit?
Yeah, okay, so good question. So when this is happening, we might explain this better on this. Let's do 30 minutes, see what it looks like real quick. Okay, yeah. So we're going on to the 30 minute. You see it, 60 minute, 30 minute. Why? This is one boring candle on the 60 minute, right? It's two boring candles on the 30 minute. Why? Because time. 2 30 minutes equals one 60 minute candle. Drop, base, drop. I went down to this just to show because we're going to have more drop, base, drops going down. When this happened, we had the one drop, right? Drop, base, drop. That was our zone. It came in and grabbed it and moved out. That's the only drop, base, drop we really have after this had happened. After we got our entry, that was our drop, base, drop. That was our anchor at one point, closing, going down. Then we have this stuff going on. So to be more proactive on, hey, how long do I plan on taking this trade? Drop, base, entry, drop down below here. As soon as I got that drop below here, if you're really wanting to lock in profits and make sure you're good, go ahead and move. Originally, you'd have your stop up here, right? We had a drop. Really, the rule is you want 2 before you start moving your stuff, and we'll get more into that stuff later. But as of right now, just for like a quick example, drop, base, drop, that was our zone. Came in, grabbed this, right? Closed down. Okay, I grabbed my order, broke this anchor and closed below it, right? Cool. I'm going to move my stop above the white space where the last drop, base, drop was, right? And then what happens? Drop, base, drop, right? Okay, I'm going to move my stop above this area, right? Well, all I'm doing is locking in profit. Price continues here. Doesn't close above yet. Doesn't really close below here. It closes below here, but this is so close to this, I would keep my stop right here. It's basing out, then it starts to move, and then boom, that's where you'd be out of the trade. Continued down, but now it's starting to move up. So really the way to do it is tracking the dropping. If you're wanting a way to like lock in profit, hopefully I'm answering your question, to like lock in profit while moving forward, you're going to want to be taking these drops, bases, and moving your stop along. Once you get a drop, base, drop, okay, drop, base, drop, next one, move your stop. Next one happens, drop, base, drop, close below that anchor, okay, move my stop to here. Really, you could have done this here, drop, base, okay, then I move my stop to here, lock in more profit. But you have more of a chance to be stopped out, and that's what happened here. What's this look like on a 5 minute? So yeah, I remember you said the indication. So the indication, if you were just doing that, moving your stop alongside there, okay, yeah, you could have done it that way. But let's say you never even moved your stop, right? Your stop is still up here. Once, yeah, oh, yes, on the 60 minutes, so we'll go back to that. I'm just kind of explaining multiple things. But yeah, here, so let's say your stop was up here. Say you didn't do it the way that I just explained. Yeah, once you start getting these green closes, breaking these red anchors, that's an indication that, hey, trend was down. I'm down with the setup. Sideways bias down or down with the setup again. Boom, anchor break. That closes, boom. I broke that anchor. I broke that anchor. I broke one. At this point, I broke 1, 2, 3, 4, 5. I broke, with this candle right here, I broke 5 anchors. It's moving clearly, dropping, but then this based out. And then I got to close above, breaking all those anchors, right? So that would be my first indication that, yeah, okay, this trade might not be good anymore. Not saying that it is or isn't, but yes, that's an indication. Why? Because at least on the smaller time frame, it's stopping the downtrend. This has been a downtrend. It's stopping the downtrend and now breaking anchors, all of the anchors moving to the upside. It could be coming and retesting this. I don't know. What are we over? Oh, it's okay. So yeah, as this stuff's happening, right? On the 4 hour, this was down with the setup and we drew the zone off the 60-minute. Drop, base, drop, all that stuff. Same stuff is happening. But as price is moving right here, this candle right here, just going to mark that vertical line. This candle right here, did this not break this anchor, right? That's an indication we've been down with the setup, but now we got an anchor break on the 4 hour. That's an even higher time frame. Where does that candle fall on this? Oh, that falls right here. So this candle right here was breaking that 4 hour. That also broke this 60-minute. That also broke this 60-minute. So it broke all of these here. Broke on the 4 hour. You can start to, let's see what it looks like on the 30-minute. 30-minute, it basically gets the same picture. It closed right here, breaking this anchor. But see, it wasn't all the way above the rest of the stuff. It didn't get too close till over here, breaking this anchor. But the first time you saw it was this, breaking this anchor. So yeah, that's your indication of, hey, this trade might be stopping. It might not be working anymore. Not only that, I'm no longer down with the setup. I'm anchor break to the upside. I'm sideways bias down still, but the bias is down, but I'm breaking anchors moving up. And when this zone had happened, this was up with the setup, then it went to sideways biased up. We grabbed this entry. Wait, you don't even see it on the daily. The daily's too big to see it. This formed when it was up with the setup. But while that was happening, that was breaking these anchors. And we got this little zone. It came a little bit further, but it really just came in here and probably grabbed this and is continuing the uptrend. Once we get a close up, because this is our anchor now. The close above or below is really what's going to tell us. Because this was up with the setup on the daily. That very well just could have came in, grabbing this here. This is a rally base, rally moving out. This wick came into 1, 2, 3, 4, 5. Yeah, how about that? Before this had happened, just not established, cleared, established, cleared, established, a 5 count of wick alongside a wall. Yeah, and price came in, grabbed this 5 count. All of this is really established, but this portion of established, it came in, grabbed it, and moving up. So, yeah, it was down with the setup. We had a nice zone. We got a nice run off it, but it came in here and grabbed white space that was still part of a rally-based rally on the overall daily up with the setup. It's sideways right now, but that's our anchor. If we get a close above here, that's an anchor break to the upside, continuing the uptrend. If I get a close below here, that then was our anchor being violated and broken to the downside. And then as soon as that goes green, that's now down with the setup. So it's like, yes, we saw the zone, we took it, we're up 88 pips. Are you happy with 88 pips? That's coming in, that came into an area that still the overall was up with the setup. You had a reason to get in on the smaller time frame for the down with the setup, got a good 4-to-1 return on your money. Starting to see anchors break to the upside. Let's see what a 5-minute looks like. This is going, then it goes super sideways, and then you get right here, you get a close above this, right? That's your first indication that, hey, price has been moving down. Finally, I shot through all of it. getting to the high, that was the highest anchor at that point. Boom, okay, I could be out. That's breaking this anchor over here on the smaller time frame. It's breaking on the higher time frames later on, but it has to break on the smaller time frames first, right? And that's really starts happening. Actually, the overall move, drop base, boom, big move out of there. You can see it on the 5 minute, boom, how it shot out of there. I finally got to close above here. Okay, that's a start of an ending. You can see it there. So again, just moving your stop along with yourself. You could do it the first way that I showed you, moving it along with the drops, above the drop, then to right here above this drop. Let's see where that is in the 5 minute. Boom, was that not right above all this on the 5 minute? Yeah. Okay, so do I want to spend all that time breaking down all this information, or just as you start to see this more and more, you just know what it's going to end up looking like on the smaller time frame? Hopefully that answered your question. I don't even remember what you asked at this point. I kind of slept like 2 hours last night, so I didn't plan on going 2 hours
No, you
right
definitely
now.
answered my question. I appreciate it. Thank you.
And sorry, y'all, if I go on and rant and ramble. I just really trying to make sure y'all understand things.
Nah, I love it.
don't know if I
I can listen to it all day.
Awesome.
Cool. Well, yeah, with that being said, I think I'm gonna call that a session. Everybody good?
You killed it, Michael. Thank you so much.
You are very welcome. Appreciate y'all being here.
Thank you.
Thank you. Drop your
You are
Instagram.
welcome. Y'all keep up with Discord.
Yeah.
Probably not tonight, but I'm talking with Edwin. I'm probably going to start randomly just doing some kind of 2-3 a.m. sessions, just kind of live in the market when there's actually good movement going on. It's not
That
going to
would
be
be
planned.
awesome.
It'll kind of just be spontaneous. So if something pops up in there like, hey, we're going to go ahead and jump in the London session. I'm not promising for how long or what, but I'm going to start doing that. So I really what I wanted to do with y'all is just really get everybody the foundation. And I think everyone's really kind of starting to, hopefully everyone's really starting to see it, how it all balances together. Because there's a whole lot of this. Like I said, some of y'all know, like I literally, this particular style, I think I took like 10 or 11 5 to 7 day courses on this, on top of taught this plenty, on top of been trading this for years. So it's like, you can get it in a short amount of time, but it gets deeper and deeper and deeper just with the understanding of what everything is happening on the charts and why. And, the more that I can get you guys understanding why and what, the better. But yeah, hopping into now that everyone's really getting a good basis and a good foundation on this, we'll start moving into like good trading hours and like where I'm literally sitting here and, okay, yeah, Euro, Aussie, sideways, boom. Oh, but I'm down with a setup or whatever. And just break it down, find a zone, just try to find stuff happening in real time, take good trades, grab a quick 20, a 10, a 30, whatever it is. And like, kind of move forward. Oh, what was that? Pound Aussie? One last one, just for fun. If it makes sense to me that I can explain it real quick. Yeah, boom. I took this, I want to say Tuesday or so. Always, again, for those of y'all who don't know, light blue lines, if you see those on my chart, those represent less than like a 4-hour anchor break line. And if you see like a light green line, that represents either a daily or 4-hour. I try to differentiate when the anchor's being broken on what time frame, so I know really what to be looking for. But when this had happened, and this is going to be my last thing. When this had happened, you see this wall right here? That's a big wall right here, right? There's a little bit of white space, mostly wall, very little white space, wall. We call that a racetrack. On the 4-hour, you really see it on the 4-hour. That was here, right? Is this not just a solid wall? There's no basing, there's no white space, there's no nothing. It's a solid wall. That is a 70 pip wall, roughly, on the 4-hour, okay? On the 60-minute, I see it here. The picture's a little bit different on the 60-minute, but I know that wall is there. I saw it on the 4-hour. I see it on the 60-minute. When this stuff is going on, up with the setup, up with the setup, up with the setup, up with the setup, anchor break, sideways bias down, boom, down with the setup, anchor break, up with the setup. Okay, all this, you guys get the point. It's changing. Price has been moving up clearly, up with the setup, up with the setup, up with the setup, up with the setup, this sideways stuff, okay? knowing that there's a wall below. I'm looking for a close below. Boom, close below. That's on the hour. On the 30-minute, let's go back to that area. Boom. All this stuff here, these are all anchors, is all stuff. Start seeing these are anchors on the 30-minute as this is moving up, knowing that the wall is down below, knowing that that's that wall here. You don't see it as clear on the 30-minute, but that's why the higher time frame stuff is more important, because you see it on the higher time frame, you see it on the 60-minute. While this is happening on the 30-minute, make sure that's accurate. Basing, boom, close below. On the 5-minute, I had a 5-minute close below. Boom, grab, market order, entry, closing. I get the close down below the anchor line that we saw, this anchor line here. What is that, 2 o'clock on the 19th, 2 o'clock, 19th. Actually, I'll make it easy. It was a horizontal line. We'll go with the 1 o'clock candle right here on the 60-minute. That was the candle next to it. That was a close below. Let's see, what's that on the 30-minute? Boom. On the 30-minute, that was our anchor, was it not? Boom, I got a close below on the 30-minute. So you really saw it first on the 30-minute. Breaking, closing that anchor, breaking this anchor. Next candle, the 30-minute and the hour, break all this stuff. And really, this was moving up. This anchor here, that's really the portion of anchor that needs to be broken. On the 30-minute, you see it first. On the 60-minute, because that's that portion right there. I get to close way down here on the 60-minute. Man, that's really far down. That's already 28 pips. I know that this is the anchor. I don't want to get in 28 pips past the anchor close, okay? So the 30-minute, I know that's the 60-minute anchor, but well, okay, I got my close there. Boom, okay, that's 15 pips away. Wow, that's still too far. Okay, let's go down to, you know what? 5-minute. 5-minute. 5 minutes close below the anchor line when that had happened. So I could be a plain old close below, market order, boom. Market order, stop above this. Why? It's more wall than I would like, but we're on a 5-minute. I don't know how, that's probably not even all that much. From here, okay, no, that's 20 pips. That is, actually, I think I did take 20 pips on that, actually. But break, close down below here, right? I would want to have my stop up here, at least for the picture that I get on the 5-minute. So I could have just flat out market ordered the close below. I know that on the higher time, it's basing out, and I can start seeing the 5-minute. See, when all this basing is happening, am I not seeing this 5-minute stuff start to break these anchors on the 5-minute? Breaking this right here broke all these anchors. This right here broke all of these anchors. This right here broke all of these anchors. So I see it happening, moving down, right? Then I finally get, that's that line representing where it looks like on the 30-minute and 60-minute and all that stuff. But on the 5-minute, I finally get my close below here, boom, market order, taking it down, stop above here. Also at the same time, I'm down with the setup. Down with the setup. I get additional anchor break line. I'm down with the setup, but then I'm re-breaking that anchor. Boom, re-breaking that anchor. Waiting. Do I want to wait? What was that? 30 pips or 20 pips? Something like that. I forget. What was it? Do I want to wait 28 pips below the anchor break line, or do I want to get a market order 5 pips or so below the anchor break line? Or wait again, didn't it close below here and look where it retraced right to? Literally at this point, I'm doing some of this stuff. And again, I'll get deeper into the rules on this stuff. This closed, so I could have done that or just waited for the retracement to the anchor break line. Not even seeing zones, not even ever, just knowing that that is the 60-minute anchor break that needed 60-minute, or I really on the 30-minute. Knowing that that is the 60-minute anchor that I needed to get a close below, that happened first on the 5-minute, and price retraces back to it. It did that there on the 30-minute example. I just moved it to match on the 60, but That would load. I know I'm jumping around. I don't want to confuse y'all. But see, that was a line on the 30 minute. Slightly above it on the 60 minute, but I got the close below. Boom, market order. Retraces back to it. I take that or just continue the market order down. But as this is happening, knowing that I have this wall here, remember the 4 hour, this wall all the way down, and that's I think I got in right here, and I took that for a good. I wanted to get to the bottom of this wall here. That's where you are. Over here, yeah, that's what it was. I had my stop right above this white space. You could have taken it all the way down, but I had it right above here. Why? Because white space could turn it around. So as soon as you see the picture here, as soon as I got the close below here, market order, boom, take it all the way down for that piece. That's coming in and seeing that it was up with the setup, but I have this anchor being violated, close below with a nice wall below. That's the close below. Anchor, wall below, seeing what's happening on the 30-minute time frame. I'm down with the setup. Breaking these anchors, get a 5-minute close below, boom, market order. I don't know if I explained that well, but that was a trade that I took. I saw the break below the anchor, took it using the 5-minute anchor breaks down below. You can sometimes this is super risky, but being anticipatory, knowing that this is already been breaking these anchors on a smaller time frame, getting in here just for a better entry. It's more risky because you haven't gotten the final close below here, but you start to notice that, hey, things are going sideways. Things are breaking, starting to break. It's sideways and starting to break either up or down on whatever time frame you're trying to go with. Bouncing around the time frames. Hey, drop, base, drop, drop, base, drop. Okay, I'm breaking it. Boom, I'm in. And then, oh, boom, I got my close. I'm in right here, let's say. I got my close below the anchor break line. Boom, I'm in again. Move my stop. Drop, base, drop, red, 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 boom, base, drop, boom, re-entry, drop, base, drop, close below, or boom, re-entry, moving your stop down along. You'd have your stop above this last anchor right here, see? Price didn't go above that. It respected these drop, base drops with the white space. A lot of times, see, this is 1, 2, 3, 4. We call that a claw, 4 fingers. I wish this was a little bit bigger. That's giving us this movement coming down. The chart's not loading. This movement coming down is giving us this drop, base, drop with a claw pattern in action coming down. We like that because that's showing that, hey, price is moving. Nothing else is happening. It's just the one wicks. It's scratching, bringing price along with it. Price tried to come back up, respected this claw pattern, and continued to move down. Drop, base, again, drop, boom. Close below, you could do an add-on again. Moving your stop to here. Basing, drop, add-on, move stop. Base, drop, add-on, move stop. There's more rules to this, and we'll dip into that another day, but that's how you turn a quick 70. I think I got 73 pips on this. Let's just say we had the original entry right about here when we got this close below this. I think that's actually what I really ended up doing, was this entry right here. That, let's just say down to here is, no, it couldn't have been that. It was 73. Oh, yeah, that's because the move continued on. The move continued on past the wall. Because that was the wall. It actually came like an extra, what is that? It went an extra almost 40 pips from that area. I remember I grabbed 73, so I got out rightish above. Yeah, that would make sense. I got up slightly above this with an order right about, yeah, okay, that's what I did, yeah. I got in right about here. That was on the 5-minute, right about here. So that was this one. When I got this close below here, seeing how it stalled out and I was starting to get the closes and breaks down, I got in here, market order. I just had the one, though. I got it for the 73 pips. But let's just say, because I was asleep also, I did this trade. I saw it in 15 seconds, went through all this, looked at it real quick, probably even less than that, took it, got in, market ordered. But as I did that, I went to sleep. I had an entry in there. I think I was only in this trade for 3 or 4 hours. I got out about 4:30 in the morning. 4:30 is probably, right about here. So that would be, about 70 pips-ish, so right around here. But it continued down. So let's just say I was actually paying attention. I was actually awake. I would have gotten in here. I would have been aware of the target, say right around in here. But I could have been watching this. I'm gonna go ahead and draw a line. No. Let's do this dark blue for our stop, right? Moved it down. Moved it down. Actually, we're gonna do this each time. This will be really cool. And then we're done. Boom. And this, I'm not even going to get all these. This is I want a bigger break because again, there's rules, all that stuff. We'll go with this one down here. Add on. Boom, boom, boom. I'm just going to do some of these random ones. Really, there's a lot more. Like following the actual rules for this, I'm not even grabbing all these because it's late. But close below, that's an add-on. Close below, add-on. Close below, add-on. Close below, add-on. Close below the anchor right here, add-on. Close below the anchor, boom, add-on. Close below the anchor, boom, add-on. Close below, boom, be another add-on. Really, we'd have a lot more. Just following these simple rules that turned this 115, if we grab that whole move, 115 to another 106, so that's 225, another 90, let's call it 300, just we're going to do less than 300 for another 90, 390 for another 73, that's 400 roughly, 60, we'll call it 460, 460, boom, another 50, boom, another 50, we'll call that 500-600 pips. All we would have been doing is taking this 5-minute close below, knowing that it's sideways, knowing what's coming on the higher time frame. Again, more risky getting in on the 5-minute. Really, we would have wanted to wait. This was our 5-minute close below this 60-minute anchor line. That really, being super conservative and safer, less risky, that would have been our first entry. So, okay, knock out 200 of these pips, but then start counting some of this other stuff. This was a 4-hour trade that if we were sitting here, I'm going to get rid of these real quick just to bring all of this home. We'll just go with the 1. Close below here. Boom. That was our entry. Wait for it to base or drop. Base again, drop. Okay, I'm still going to leave this here. Drop, base, drop. Boom. You could move it. I'd still, just because it's so close, I'd still wait. Base, drop below. Boom. Once you got this drop below here, that's when I would move my stop to right here. Drop, base, drop. Boom. Move my stop. Drop, base, drop. Boom, move my stop. You always want your stop to be above white space, always. Drop, base, drop, this is all super close, so I'd keep it here, super close. See how I finally get a more strong, it's not the strongest, but a stronger dropout. Base, drop, that's one big candle, boom, drop. Okay, cool, that's when I would move my stop to here. Drop, base, drop, strong move out, boom. Bring my stop to here. Drop, base, drop, boom. With as close as that, you could. But actually, at this point, I probably would just because, hey, I want to lock in as much profit as I can. Drop, base, drop. Still right here, that's your white space, so you'd still keep it here. Drop, base, drop. You probably would have added on here. You still would have wanted to have it above here, really. You could have been super, super, super on it and moved it down here, but really I wouldn't have had a reason to move it from here with this pattern happening like this. And then boom, you finally got out of it. But as soon as you saw, so you got back in on this entry here, right? I have my stop up here on 10 positions that I'm up 500-600 pips on a trade that I've been in, that I got into, as of waiting for this one again, I got in up here. This one here, 2 o'clock in the morning, and now we're at 5 in the morning, and I'm up, 500-600 pips. Boom. This is dropping, basing, dropping, basing. So I had my next add-on here. Technically, you could have moved it to here, but when we get into this later, we'll go over why. I'd still keep mine right here for right now because this was too. It's not clear. I don't like that. But it also kind of gives me an indication too that things might be turning around. Then I have the drop again. Could have added on, could have not. probably would have, with as strong as that was, I would have added on again. And then here it starts to turn around. See, as soon as I break this anchor right here, although my stop is up here, I said, well, hold up. This right here, this green candle is the first time, is this not the first time that we broke an anchor to the upside since the original move up here? Since 100, since 103 pips ago on one entry. That was the first time that we broke an anchor on the 5 minute, using the 5 minute. Well, we literally had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 add-ons with basically, really, if we really like did like that, that's a 1,000 pip trade right there. We're not one time, or actually it did happen here, but again, it did break, now that I say it did break an anchor here, but again, our stop was still good. That was the only other time. Yeah, that was the only other time. And again, with this drop here, that was your initial entry. You wouldn't really have it again until this one. You would have still had your stop up here. You would have had your stop up here. When this is going on, you still would have had your stop here. This kind of closed above. Like, okay, hesitant. Your stop's still right here. Boom, close above. Good, decent close above. Could have added on if you want to be a little more clear. Boom, you wait for this one. Your stop would have been here till that close, really. Then you would have moved it. So this was a 100 pip trade. If you just did it regular, I got 70 on it. But if I was there watching, just using a 5 minute, just drop based drops, continuing the downtrend on a 5 minute chart, you just made 1,000 pips on over 3-4 hours off a 60-minute anchor break line with your original reason for entry was this wall right here, 5 minutes entry over here, turning that into continuing with the move, just moving your stop along. Not even, yeah, I know this is the bottom of it, but it's working so well. It's looking so pretty. It just continues to keep dropping. I'm just moving my stop, locking in profit on all those add-ons, until I start to get it. It turns around. I see that here. I still got my stop up here, but then it breaks another one. It breaks a second one. Boom, I'm out. Save yourself. Why you're up? You want to give back another, but hey, at the same time, that's 14 pips, say to 5 to 10 entries. You know, that's a quick 100 pips. You want to give back 100 pips, you're already up 1,000. That's 900. But if you want to minimize that, boom, get out right here. Boom, you just grab 900, 1,000 pips. Are you serious? Doing nothing but color change to the downside on a 5 minute for add-ons with chasing a 4-hour racetrack. Seeing anchor breaks on a 60-minute and 30-minute, and seeing it even smaller on the 5 minute being what do you call it? It's late. We've been going intuitive, you know, on what's going to happen. Like, it doesn't get any better than that. 1,000 pips? Are you serious? So yeah, that's why this stuff is cool. It doesn't work like that every time, but knowing how this works, and this is more of the stuff that I really want to dive into later on, but I know this is going to be recorded. There's probably barely anybody in here right now. We've been on this for like 3 hours, but it's, there's still people in here. Cool. Yeah, it's good stuff, right? Y'all like that?
For sure.
Thank you so much.
Yeah, we love
It
it.
was very good, man.
Yeah, you're welcome. I'm telling you, like, literally doing this, you can have our initial risk on that. Let's just, this entry here, the initial risk on that was 5 pips. Entry here, you would have a stop. No, I'm sorry. Closer below here, you would have had your stop above this base drop, right? That broke that anchor. This broke that anchor. Market order, stop above here. That is that's a 10 pip risk for 1,000 pips. That's worth, and the whole way down, all you're doing is playing with profit. You're already profitable. You're adding on, moving your stop, locking in your profit. While we're here real quick, just since we just did this, and this is actually a really cool example, you know what, I'm actually going to keep going with what the actual rules for this are. I'm not going to get into all of them, but, you know, if y'all want to log off, but we're here, so I'm just going to keep going. Let's say using this as our original entry, right? Market order, boom, right here. Go ahead, let's see, let's make this, call it this color, and we'll go Boom. Original entry, right? Original entry. This is where our stop is, more or less, right? This is we call this is going to be our zone. So again, you can wait for the retracement. That never happened. Or you market order. I market order. I'm in, right? This is my zone. This is my stop. I'm on the 5 minute. So this is what you do. Okay, I'm in now, right? I know that when you have walls in racetracks, the point of walls in racetracks is to get this right here. Because a lot of times sometimes it does it back and forth, but when you get the right ones, it literally will just do this here. So this is my entry with my stop above here. That is a 6 pip zone. If you want to count the whole thing and be very super, 10 pips, right? Somewhere between 10 and we'll call it 6. So that's what the actual box is for where our stop is at. We're on a 5 minute chart, right? I'm going to put ATR in here. You want to know what the ATR, the average true range of your entry time frame. Back when this had happened, the ATR was 7 pips. So you want to wait. Your stop is above here. You need to draw a 7 pip box. How big is this box? This box was what? What did we say? It was 6. 7 pips, right? Okay. That's my entry, right? I have a 7 pip ATR on the 5 minute. I want to draw, I think I haven't done this in a while. It's just 1.5 times the ATR. So 7 pips would be 10 pip box, right? So basically, yeah, that whole section here is a 10 pip box, roughly, right? So here's my entry line. So I'm in here, right? Market order, boom, right here. I'm going to draw a 10 pip box and I'm going to place it at my entry that I got into, right? The top of it to here is 10 pips, right? Now, how about that? That's right where our anchor break line is. I am going to then wait. That's on the 5 minute. That's the 5 minute ATR box, 1.5 times. I took my entry line and I drew the 10 pip box for 1.5 times the 5 minute ATR. I'm going to wait until I get a close below this 10 pip box. Why? Because I'm going to lock in profit from my entry, from my first entry. Because as of my first entry, I'm waiting for a close below. I'm up 10 pips as of that. This happens here, right? So I'd be right there at 18 pips. You can use a 5 minute, but really you can go down to a 1 minute even. 5 minutes going to be safer, letting you know that that trend is continuing. Let's go way back. I'm talking about, okay. That's my 5 minute ATR. The way to really do it is a 5 minute close below, but you can be super aggressive and take a 1 minute close below. I have drop basing, drop below here. As soon as I get a close below this box, below, you want to, with this anchor being right here, you want to close below there as well. Close below that box, boom. That's when I would do my first add-on. So at that point, you're up, I think, what did we say that was? Let's go back to the 5 minute. All right. So let's just, again, the safest way to do it's a 5 minute because that's a larger time frame when you're ready to start doing this. This is really showing you that, yes, I'm in with a higher time frame, close below, boom, add on here. As of that point, again, you can do the 1 minute, but you want you want a 5 minute close below here. Cool. Now I have a 5 minute close below here, add on. From that point, I'm going to keep this 5 minute here. At that point, I'm going to change this to a 1 minute. That's when you would get your ATR on your 1 minute. Indicator, average true range. Okay, boom. I'm going to go all the way back here again just to get the accurate average true range at that time. As of this time, when we got the first close below here, our ATR on the 1 minute was 0.4, or no, I'm not sorry, it was 4 pips. So every 1 minute, this is moving 4 pips. Okay, cool. So I would then draw a 4 pip box. Let's see. Eight two four five two 82412. Make it exact. Why not? So now I have a 4 pip box, right? It's 4 pips. It just didn't show exactly. It says 3.9, but it's 4. Okay. Once I get the close below here, anytime I get a close, once I have my add-on, or actually show it on the 5 minute. That's that box. Once I do my first add-on, and in this instance, I would do it here. I draw my 1 minute ATR box down below. Anytime I get a close below, I can add on. So in this instance, we're in here, close below, first add-on, right? Boom, close below. We could do another add-on, 4 pips. Another add-on, 4 pips, bringing our stop down. As of this point, close below here, add-on. That's where the add-on was. Again, me personally, I'd keep my stop here because you want a good, that's a strong move in, that's a basing, strong move out, but it hasn't happened again. That's where it happens again. Well, really right here is where it happens again, actually. Because we want those stairs, again, we want the basing, big move out. We have basing or drop, base, big move out. Basing, those 3 candles, big move out. Basing, big move out. Basing, big move out, but I'm using my box moving along. When that had happened, I'd still have, why would I go right here? I'd want my stop right above that last bit of white space. Boom, big drop, okay. Add-on. Drop, close below, another add-on. Below the 1 minute ATR. You don't need to do 1.5 times, it's just 1 minute, boom. I need to close below, boom. Close happens here. Add-on. See how it's never trading above it again? Close below here. You could count that. That's so close. I would really want that. I want that more explosive close. You start seeing this kind of stuff, a boring close below it and right there. It's risky. I want the explosive. Boom, that's the explosive. Add-on. You still would have been good on that one, but I want explosive move out. Explosive is more important than anything, not anything, but in reference to moving, move out, explosive is important. Add-on, drop base. Again, on this one right here, that's a boring candle. Now I want an explosive. That's it right there. Add-on, still keeping stop would be right here. And by that point, yeah, I would actually have my stop right about there. Drop, close below right there. What was it? Close below, yeah, right here. Add-on, boom. I'd still keep my stop there. Boom, close below. Add-on. Up, close above. Okay, wait, hold up. Boom, close above again. Now I'm out. I got 2 closes up above, I'm out. So I'm taking my initial entry, breakout entry, waiting till seeing what my ATR is. If I'm using a 5 minute candle close for my entry, and that's what we did, I'm going to my 5 minute. I'm going down. I'm seeing what the ATR is at the time. I'm then going to do 1.5 times that. I'm going to draw a box, put the top of it at where my entry was. So as soon as I get, again, it's safer to use your entry time frame. Again, you can do the 1 minute. You can, but it's more risky. I would wait. If I got in on a 5 minute close below, I would wait for my first add-on to be a 5 minute close below. Got it right here. Boom, add-on. Once that has happened, I get to go down to the 1 minute time frame, see what my ATR is. That's my add-on. Draw my 1 minute ATR box. Every time I get a drop base drop with more of the explosive move out, you know, you can, like I said, I probably would have taken this probably like right here. So 2, 3, 4, 5, 6, 7, 8, 9, and 10. But even I'm not sure if I would have taken this 10th one because this candle was pretty explosive. It wasn't boring, but I probably would have doing it this way. So 10. I would have done 10 add-ons instead of, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. I would have skipped a couple of these. But using my 1 minute ATR box and the next add-on, that's the start of the top of the box. You're wanting to keep your stop above that, moving this down, add on, moving it down, add on, add on, add on, add on. But again, you want to think of it in the sense of, okay, if I was looking to short this, where's a good area that it's going to grab something to continue the downward movement? If it just happened to turn around, I want it to be, that's going back to your meat and potato rules, I want it to be a drop, base, drop with white space, explosive, strong move in, boring candles, explosive, strong move out with white space. Time of level creation really doesn't matter at that point because you're already in the move. So it's not it, but you're going back to those rules and that's what you're thinking of, where am I moving my stop alongside here? All this stuff right here, this isn't, once this happened, I'm going to have my stop above this because I got the move out, but I'm not moving it until I get another drop base and explosive move out. Okay, cool. Now I can move it to here. Strong move in, base, boom. Okay, now I can move it to here. Strong base, boom. Okay, now I can move it to here. Base, out, boom. Okay, well, now you wouldn't do it here because this is all the same thing. Why would you move it to right here when you're just in the middle of white space? No, you're going to keep it right there, right? So hopefully that makes sense. That makes sense. Y'all like that?
Yes, it makes sense.
Yes,
Cool.
it makes sense.
Cool. So, again, I took this trade. Again, I took this trade, went to sleep. When I woke up in the morning, I'd seen already. It's like, oh, trade hit, trade hit, target, profit, whatever. It's like, oh, sweet. That's the best way to wake up. The best way to wake up is to wake up and you were in a trade and you already hit the profit, or you had a trade trigger that you hit the profit, or you're just in and you're up, 60, 70, 80, 100 pips, or 20, 30, whatever it is. But if you happen to be there, like if I actually stayed up and did this and I had more, I was already maxed out on my one entry, so add-ons wouldn't have mattered. But, eventually when I have more money again, a lot more money, when you start, really everyone wants to be working up to standards, at least a standard per trade. And then each add-on would be a standard. So a standard 10, having 10 standards going, that's a quick little, $10,000 trade right there. Wait, at that, it's a $10,000 trade that you did in, 4 hours with an initial, 10 pip risk. And if you get to the point where you got 10, you can trade 10 standards at a time. You got 100 standards going. You just made 100 racks right there. That's a $100,000 trade. If you had, as at that point, you would need, what is this? Well, this is pound Aussie, so this is expensive. You would need the trade standard. You would need 6,000 for a standard. So 10 of those, you would need 60 racks. So yeah, if you had $600,000 in an account, if you had $600,000 in your account, you could have taken 10 standards for every add-on. And that would have been a $600,000 trade. Not bad for 4 hours work in the middle of the night using a 5-minute chart color change to the downside, chasing a 4-hour wall, 5-minute entry, using 5-minute rally or drop based drops, stairs moving down, stairs moving down, stairs moving down. That's why stairs, drop based drop is always authentic, because it's whatever's over here. This is just clearing through everything, forming the way. Boom, 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 boom. So, yeah. Actually, one last thing. If this makes sense too, if I can email myself this real quick and put it in here and see how it sends. I've got a list that, let's see if this list will send to myself as a document. And if it does, then I can upload this real quick. And one last thing you guys can take home with you. No, it didn't, but I'm gonna go ahead and I'm gonna put it in here real quick. I'm gonna do it so you guys can just take a picture of it. And later on, I'm gonna put this on a document, and I'll put this on a document so you guys have it too. But regardless of account sizes, like the goal really is getting to a standard. You want to be taking a standard on everything once you have the account size for it, but every pair is different. I'm sure y'all know this, but I just did this the other day because I figured it's good information for people to have. And I like to, because I'm only working with limited funds right now. I want to get the most bang for my buck. So let's see here. Go to the chat. I'm gonna post this in here so y'all can see it on yours. So you can go to the chat box and get all that information. But what this information is showing you how much margin roughly. This is my brokerage. I use Owanda. How much you need in your account to trade a standard. You know, a standard controls $100,000 nominally. You don't need to have that much, but they give you, because of leverage, that's what you need. Like for the Euro Aussie, you need $3,538 in your account to be able to take a standard at, on average, about $10 a pip. Every pair is a little bit different. Actually, there it is right there if y'all just want to take a picture of that. But every pair is different. For what, you know, Euro CAD with $2,358, I can trade a standard. You know, what was that example? The pound yen, the one that I was just explaining right now, it's like I need $6,535 to trade a standard to get $10 a pip. But hey, Euro CAD, I can trade, you know, I need a third of what I need in my account to get $10 a pip. So if I have only limited amount of funds, you know what? And you're trying to, I'm not telling you how to trade or what your risk to reward for you is. You need to follow your rules on that. Me personally, I'm trying to grow my account quickly. I'm trying to get the most bang for my buck. So if I have a setup on something looking similar on Euro CAD where I only need $2,000 to trade a standard $10 a pip, or I'm looking at, let's do another CAD cross pair. Pound CAD where I need 6,535, you know what? And it's the same looking thing. I'm going to take the Euro CAD. Why? Because I can get into my position can be 3 times the size. So if I'm right, then I just made 3 times the money. If I'm wrong, I just lost 3 times the money. But
Can you scroll down real quick?
Yeah.
Thank you.
Yep.
Okay, you're good.
Cool. You know, and it's like what you can end up doing when you get the right trade. Like I said, the position I'm in right now, I'm actually in EuroCAD. I like EuroCAD right now. Why do I like EuroCAD right now? Because EuroCAD moves 100 pips a day. You know, this trade right here, this is margin on this trade is $200. I'm up on a $200 trade using margin $200. I'm up $48.35 right now. If this ends up getting to my target that I'm trying to take it to here. I've been trying to get it to close below this for 2 days now, basically, since my original entry. And then I have I got out of that one and got into this position. Once it breaks this stuff on the daily, is this not a daily wall right here? It's a daily wall, right? Here's the base rally. Here's the white space up above. I want to be up above that. Really, it could come down to here, but you got to look at the 4 hour and some stuff like that. Let's see what it looks like on the 4 hour. I'm in this pattern here. I'm kind of balancing what's right here and also what's on the daily. This is the bottom of it on the daily, but it's probably going to bounce into here. But that's 2 wicks. That's cleared out. That's cleared out. The white space doesn't start till down here. So I'm kind of at the higher side of that portion. I don't want to give up any more because really I would like it to down here, but that's another 32 pips. But hey, I'm willing to give that up to have this, I have a 20 pip stop, and I'm going to, once this hits the target, that's 130 pips. It ends up being $100. I just doubled my account basically if this hits the target, and that's one trade. So if I have the same setup on Euro CAD as I do Pound CAD, where I can only take a third of the position, I'm gonna take it moves 100 pips a day. I'm gonna grab that money. You know, I've got a couple different accounts. So this one I kind of have a little fun in, but you know, why would I take a trade why would I not try to go for the most money I can make, you know? And if you understand what each pair, what the value is and how much you can trade on it, okay. So if you have a choice, apple to apple, okay. Me personally, I want the more money. So, but yeah, that's kind of that. Appreciate y'all being with me while I rant for 3 hours.
Thank you so much.
You're welcome.
Yeah, Michael, we love the
Thank you.
rant.
Cole, you're very welcome. Glad y'all are here. Glad y'all are liking it again. My Instagrams get Get Ninja Fit. I'm not always in the Discord. I sign out of there sometimes. So if you have any questions, y'all can literally message me anytime. As soon as I see it, I'll answer. But we'll keep doing
Your
these
sessions
sessions.
are Monday and Thursdays, right?
Yeah, as of right now, we're Monday at 8 p.m. Central, and then 9 p.m. Eastern, and then what's today? Thursdays starting at 9 p.m. Central, 10 p.m. Eastern. And then, like I said, here's every so often I'm going to start popping in and just kind of doing some like London stuff, early morning stuff, but it'll kind of just be.
Can you drop your Instagram? I'm sorry.
Yeah. It's Get Ninja Fit, and I'll type it in here too.
All right, thank you.
Yeah,
I was
you
trying to
got
get
it?
it last time, but I couldn't. I don't know. Something messed up. I couldn't get it.
Yeah, no worries. So yeah, I'm on there. That's the best way to reach me. It's like I said, shoot me a message. I'll see it when I see it, and I'll get back to you. But I want y'all to know this. Like, if you have any questions anytime, I literally don't mind explaining or answering. Because like honestly, the more that I do this, I kind of had gotten out of trading for a couple of years, doing some other stuff for various reasons, and like I'm getting back into it now. Like I said, I'm kind of just, my goal is to kind of double and triple my account every, short amount of times, and just kind of just use that free house money rather than do other stuff with it. But the more I explain this stuff to y'all and I do these sessions and all this stuff, it just makes me better. For one, it makes me understand more, it makes me remember stuff. Oh yeah, this, oh yeah, that. So the more questions y'all ask, the better. And I'm very glad to be helping. So with that being said, we will go ahead and end for tonight. Like I said, look, if you ever see me post something in Discord that I'm going to do a live session right then, just hop on in.
What was it? It's Ninja.
Yeah, here, I'll type it in.
Oh, okay.
There you go. Now it's in the chat box. Get Ninja Fit. So it's been real, y'all. It's been fun. Hopefully y'all learned and are excited. And hey, y'all do me a favor, because I'm doing this through the Discord right now, but the more people know about this and the more people get in my sessions, it's just helpful for me. So if y'all are liking this, do me the solid, talk about it with some people and just try to get people in here, because it just helpful. You don't have to do that at all, but it's just, it's
No,
cool.
absolutely. We'll do.
Yeah, most definitely.
Cool. Well, I appreciate y'all. Yeah, absolutely. Y'all have a good night. Look out to see if we get in here later on. Thank you very much. And if not, I will see you guys the next time.
I appreciate it.
Good night.
Yes, sir. You're welcome. Yep. Y'all have a good one.
Love you.
All right.